Good morning. Happy Friday. Oh. All right, it's Friday. Pre-market, we have quite a few stocks that are showing above average volume. Apple obviously had earnings, trying to head back towards closing prices. It's down $3.70. Broadcom's higher. Amazon, the FANG stocks are higher. Good morning. Good morning. All right, most of the FANG stocks are higher except for Apple. All of the FANG stocks are higher except Apple, the top 10. The top 10 stocks. These top 10 stocks higher. Tesla has been on the move this morning. It's up $3.40, trading $221.90. Tesla. So keep an eye on that one. Okay, SPY is trading a bit higher. It's up $2 now. SPY up $2. If you took anything overnight, I did not. Okay, let's look at some of these stocks that are showing above average volume this morning. Let's see, UPS 4 times. UPS. Okay, UPS is a bit higher, it looks like. Let me just check here. Good morning, everyone. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Friday the 3rd. UPS is up $1.60. High relative volume, 4 times normal. Illinois Tool Works. ITW. All right, so IWM is higher. ITW. Okay. Let's see. TJ Maxx, we took a TJ Maxx trade yesterday. That's a bit higher. TJ. Sector-wise, we've got all sectors green, except for tech. XLK is down 0.1%. No big deal. Telecommunications are off 0.1% as well. And we got about 4 sectors that are unchanged. NVIDIA, what are you doing, NVIDIA? NVIDIA is higher. Okay, that looks good. Amazon, higher pre-market. Okay, Amazon. If you took Amazon on a dip yesterday, or if you still had a position, you didn't sell it, looking for Amazon to continue. Amazon's up 87 cents. Apple pushing higher. Look for buyers to step up. Shorts to cover. We've got 11 minutes to go. Let me get Rick squared away here. Lee Starr, as you know him. We just sent him the link to the broadcast. He'll be back in a few days, helping out a friend. Taking care of his house after the hurricane. Let's see, link. All right. Where are you? There he is. Okay, so TJ Maxx. Yesterday we talked about TJ Maxx. We've got 10 minutes to go. 10 minutes to go. TJ Maxx, it did a buy right. I said that if we start to move higher, we got earnings in a couple of weeks. All right, so right now TJ is trading higher on 12 times RVol. TJ Maxx at 8:54 a.m. we had 12.4 times relative volume. We're trading up 50 cents right now. So pushing above this level. Need to get through 91. If we do, I'll probably add shares, but I won't add covered calls. Should be for obvious reasons. I want to, goose this as much as I can going into earnings. Okay, 9 minutes to go. TJ reports November 15th. Ooh, that is 2 weeks. 2 weeks ahead on a Wednesday. On a Wednesday, TJ Maxx reporting. Last time, the company beat expectations with earnings growth of 23.2%, revenue growth of 7.7%, reported revenue of 12.76 billion. My thesis is that people will be buying into the holidays. Obviously, this is before the crush into Black Friday and the Christmas holidays and stuff. I can't believe we're already at that point talking about Christmas. I was in Costco. They've had Christmas products out for a couple of weeks now, even before even before Halloween. So Costco on the ball. Let's see what Costco looks like. Costco. Okay, Costco looks pretty good. If we can get some kind of volume, Costco is up 60 cents, 68 cents. Costco up 68. All right, so we're starting to lift. Costco's starting to lift. The top of that wick is 559.51. That's $3 higher. So Costco's not quite there. TJ Maxx, though, looks like it's going to go a little bit. Volume was well above average yesterday. S&P is above resistance level, starting to push a bit higher. Okay, S&P support 4,300 and then 4,266 below that. Resistance 43.13 and 43.36 for the cash. Futures are already above those levels, 43.60 at the present time. And looks like a buy. Going to trigger. Tick cumulative is still green. We finished up 9-1. Okay, we did finish up 9-1. So that's a big deal. Okay. That's a big deal. Yesterday we finished on a major accumulation day. Okay. So for those of you trying to predict direction, what happened there? Oh, okay. I don't know what the hell I just did. That scared me. Okay, so we finished up yesterday on the NYSE. That's 2,700 stocks, folks. That's 2,700 stocks. And we finished up with a major accumulation day. 9-1. 9-1 up volume. Okay. That's a big deal. Okay, we've got a couple of minutes to go for the opening bell. 5 minutes to go. Ah, boy. All right. We've got 3 minutes to go. 3 minutes to go. Okay. Less than a minute to go. Let's do it. First 15 minutes, not doing much of anything except taking profits off the table. And then reassess the markets. Watch these high volume stocks. Like Tesla. Okay. Let's do this. Okay. Let's see. Let's see if we fade as soon as we are we tagged. No, sorry, we're off the screen here. Okay, we're above resistance levels on the cash. We have 4350 as the next resistance level overhead. SPX 4350, next resistance. Okay, Apple's off 380. Watch for people to take profits off. Let's see, Amazon higher. Okay, Amazon looking good. Snowflake higher, Tesla higher. Tesla's up 328 holding. Google, continuation, Google. Get a nice run on Google. That would be nice. Okay, IWM, much higher IWM. After earnings, that's limiting the upside for the NASDAQ, which on days like today are often the leading stocks in the NASDAQ, but they're not today because of Apple mostly. But the Russell having a very good session here as yields come down and the dollar drops significantly, what we've been talking about all morning after IWM. Thanks, thanks, Stephen. Expectations and introduce fresh inflationary fears. So the market likes a peaceful report and we get risk on. Crude oil also down. Bitcoin. IWM, big move on IWM. We also got reminders of the pitfalls of the crypto world, but Sam Bankman-Fried being convicted in his. All right, Disney. Nice little move on Disney. Let's go to the New York Stock Exchange. We're seeing markets correspondent has a couple of reports for us, and we'll start with the upside this morning, Caroline, since we do have a market that's rallying. Shares of the Jack Dorsey's block, aka Square, up 17%. Big rally for this company. How come? Hey there, Oliver. Well, it was a beat on both the top and bottom line. Chewy with the follow through. Chewy's gone. Chewy. Astro Bandit. Nice, nice call. Extreme high tip alert. All right, Chewy's gone. All right, those 20, the 20 call is in the money. December 20 call. Chewy, probably going to peel some off here. I'll take half off. Probably keeps going. Extreme high tip alert. Kept an outperform rating on the shares, saying Q3 earnings underscored a steadfast commitment by management to drive profitable growth. But then on the other hand, we saw RBC cut its price target to $77 from $90. Kept an outperform rating though, so still bull. Canaccord also lowered its price target. They're at $80 a share from $90. Also kept a buy rating, but take a look. I mean, block trading at $50 a share right now, so still implies quite a bit of upside. Just kind of scaling back the price target expectations. Square currently up about 14% in the early going. Still negative year to date, down about 20% year to date, but looks to be a good day for the company, at least in the first 4 minutes of trading. Yeah. Okay, Chewy, nice move on Chewy. Our S&P holding the highs. All right, so far so good, folks. Apple gapping down. That's not working, unfortunately. That happens. Bitcoin is still holding near the upper part of its range last week. NVIDIA higher. NVIDIA is higher. Okay, NVIDIA looking good. Don't forget to take some profits off. De-risk, folks. That was a 90% up all day yesterday. All right. 90% up days on an NYSE, a major exchange. That's a major accumulation day. That's a big freaking deal. Okay.
Great start for the early cloud companies, cybersecurity, networking type stuff. It seems like there is still a little bit of uncertainty. Extreme high took alert sector about kind of what growth is ahead. Actually provided a pretty weak outlook. The actual headline numbers were mixed. It was a bottom line beat, but a top line miss. But then that outlook really. What could be crushing shares today. As you said, they're about 20% lower right now and dragging other companies like Zscaler and Palo Alto down with it as well. Those gains look much more modest, not quite double digits. But just running through these numbers, EPS of 41 cents did come in higher than what analysts were expecting. They were expecting around 37 cents per share.
S&P still going. Nice work, folks. Nice work. Looking good. TJ Maxx. Okay, TJ. Okay, we got 2 weeks. Do I want to roll these out? What do I want to do here? Let me go ahead and I'm going to close the. I'm going to close. Nah, not yet. Not yet. I'll wait. Shit. Stochastic MACD firing. Got a nice follow through. We got 2 weeks till earnings on TJ Maxx. I'm going to go ahead and close this because we're up. I'm up big on the shares. Okay, that was a nice gain in one day. TJ Maxx sold for a nice profit. Nice work, Astro. Yeah. Let's see. All right, looking good. Taking a little bit off here and there. Carvana. Price targets. Wedbush lowered its price target to 40 from 48. Notes lack of confidence in medium-term profit trajectory. That's really weird. Net, the company is making $2,500 per vehicle, $6,000 gross. They make $6,000 profit in gross on each car they sell. Carvana. I don't know what this analyst is looking at, but that looks pretty good. If they sell a car and they make net $2,500, $6,000 gross. I don't know what they were making before because I really wasn't paying attention to that metric, but that sounds pretty good. And the stock is up, which is even more important. Stock is up. More importantly. Okay.
Sector that so many thought could kind of do no wrong in cybersecurity, all the demand and that's needed to keep businesses safe. But I guess the market just got overextended in how it was pricing in future growth for these companies. So guidance disappoints. The whole sector comes down with it. Thanks, Caroline, taking us through the reaction to big decline on the morning. But those are limited in number right now. But let's go with winners.
Okay, Carvana. I had a 35 call. I just rolled it up for a credit. Carvana, CVNA.
Is up. Live Nation managed to hang on to a thread of its gains. You got a couple
The 35 strike. expiring. That was February. All right, so I'll roll those cover calls up for credit 50 cents. Those are 550, 535. $5.40. All right. So, all right, S&P continuation. I'm looking at TJ Maxx here. I took the position off because it was a nice one-day swing. Caught it just as it was rising yesterday. I hope I don't regret it, but it was a one-day swing, nice profit. So I go ahead and reduce my risk and take the profit. All right, what are the banks? There goes S&P. TJ. No. Target. Okay, Target gapping up. A lot of stocks gapping up with that 90% up day. Wow, we're at 13. We're 13 to 1 up volume. $12 to 1, 12.5 to 1. Skyrocketing in its leadership and dominance in the sector. So now a 7.5% move. You got Caesars rallying with it. You got MGM. You got Penn. All stocks that have been beaten down real hard. So maybe due for a bounce. There's also some encouraging reaction though in the travel category as well. We had Booking and Expedia report. Wow, what a day. What a freaking day. Yesterday was 9 to 1 up volume. Today it's 12.5 and rising. But then it seems that bearish narrative on Expedia, the real U.S.-based booking business, was just too negative because this thing just woke back up and sprang to life. Yeah, and I think that's a little bit what we're seeing here. Okay, S&P 500. And starting to push through major resistance here. Okay, Wells Fargo higher. So don't forget to take some profits off the table. We've got a lot of stocks moving higher. PayPal. PayPal, nice follow through.
Anything big to say about Booking? And again, I think if all was equal, if the shares have been reacting the same way over the past 6 to 12 months, where that buyback wasn't involved, I think these reports are somewhat similar. Booking's been doing very well. They beat on earnings per share. That was up year over year. Revenue was up 21%, 7.4 billion. Gross bookings rose 24%. Room nights books increased 15%. Now there was more commentary that we saw, out of some of the concerns over travel demand going forward, especially as we look at the Israel war, and we look at other things going on, and why the buyers, and certainly the economic outlook. That's been one of the things we've heard from the cruise lines, we've heard from Airbnb, now we're hearing from Expedia bookings. They're certainly focused on the macroeconomic situation and what sort of headwinds might be. Okay. Great stuff, Jeff. Thanks for the analysis. We got to get going because we got to talk some Apple. It's time.
Okay, Apple's starting to climb. Apple's climbing. All right, we got buyers coming in.
Understand the world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're going to always make sure that you have all the financial tools and support to secure your financial future. That means a lot for my community and for every community.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week at schwabnetwork.com and on all your favorite streaming services. Schwab Network.
Wow, nice move. S&P. S&P moving off the screen above resistance. I'm just laughing at some of the people that are telling me I don't know what I'm doing on StockTwits. You gotta love it. You gotta love it. Everybody has an opinion in the markets. Frankly, I don't care. You can have an opinion. I have an opinion. Markets don't give a you know what. All I care about is the data. As Chris Travacco says, it's the weight of the evidence, stupid. I added the stupid part, but it's the weight of the evidence, stupid. You can have all the opinions you want. Of course, we've been up nicely, but yesterday was a 9-to-1 up volume day. Today we got 12-to-1. 12-to-1. NASDAQ is 5-to-1. Tick cumulative is almost pointing straight up. That's telling you that institutions are buying more than they're selling.
Extending their week-long rally here this morning. Just need Apple to go positive, and then it's home free. Let's talk about the stock afternoon. Tom White joining me here in the studio, and Martin Yang from Oppenheimer, senior analyst of emerging technologies and services. Okay, Martin, welcome back to the show. Apple shares off a little bit this morning, but performing well. What did you think of the report?
New orders,
I think the report at first look has really terrible guidance, but when we dig deeper, it feels like iPhone is very strong and the guidance isn't as bad as expected. So overall, I would say it's an inline quarter with a slightly better than expected guidance for December quarter, and we really look very favorably upon the iPhone strength in China and in other regions when you back out the currency headwinds.
Tell me about the iPhone numbers that you had expected, because it looked like analysts had a pretty wide range, and the average that I saw recorded by Bloomberg was kind of like right where they hit for iPhone. So when we were reading the numbers last night,
I wasn't sure how to describe it as an iPhone beat, miss, meet. It seemed like there was a little bit of a debate about that.
Yeah, I think. Excuse me.
High took alert plus 800.
September results, iPhone is in line and slightly better because I was expecting them to lose share to Huawei as soon as the September quarter, late September, and that will show up in the numbers. But we haven't seen that, and we haven't seen that in the guidance either.
What about the China miss? When we talk about Huawei, they were lower by like 2 billion versus what the analysts were looking for in China. It seemed like 1.5 billion, 2 billion or so. Was that not a negative event from the China market?
No, I don't think so. When you back out the currency headwinds, Greater China grew at a faster rate on a yearly basis over Europe.
Wow.
Okay, so the growth rate there.
Oh man, it's 13-1 up volume now. Holy smokes. And growing. I think the bears are covering. What do you think? Wow. That's nice.
China's economy, since it opened up earlier this spring, hasn't really grew or snapped back relative to the year before. So we're not in a favorable comp period for China for the past quarter.
Gotcha. Okay. So then, looking forward, what's going to bring top line growth to the whole company? Because this is the fourth quarter in a row that we saw contractions of revenue for Apple. Do you see that turning anytime soon?
I think Apple will stay in maybe a few quarters more of the slower growth or no growth period. We need a couple of products to line up really well. For example, in the December quarter, management talked about iPhone and MacBook growing strongly because of the product cycles, whereas iPad and wearables are declining due to unfavorable comp period the year ago. So if we go into one of the quarters where we have multiple product launches,
All right. So, wow. All I can tell you is that the data says markets are really strong right now. Now, that said, I'm not a dummy. I am taking profits off into strength, adjusting positions, and taking profits where it makes sense to do so. Wow. Disney actually getting a move on. Disney? What the hell's going on with Disney? Disney. All right, Disney's the top of the range. Okay. Disney's the top of the range. Let's see, where are the calls at? All right, so I want to roll these up. I currently have an iron condor on Disney. Let's see, debit 20 cents. Okay, that's not bad. 20 cents.
Complementary hardware products and complementary software services, and then the core market it is expanding for Apple, and we haven't seen any credible measures that could take Apple's share away from it. So for Apple, I think it is really reliant on a new iPhone cycle that may come maybe 2-3 years time after going through already 3 years of very strong iPhone cycles in the past 3 years. So investors need to be patient. I don't think Vision Pro is the one that will save or alter the trajectory of Apple's growth in the next 12 months.
So, what do the sales need to look like to live up to your expectations?
Okay, looking good. NVIDIA still going. NVIDIA. Paramount back above 13. Paramount.
Let's see, in constant currency dollar terms, keep growing. And also, we would like to see service revenues maintaining that double-digit growth into March quarter as well.
Okay, S&P still going.
Tom, let's talk here. Martin's price target, I believe I should have asked him before the last minute, but $200 still? $200. So that they've changed the end of last month. Last 30th, so unless it really changed it today. Okay, so pretty positive. $200 price target. Let's start with sort of a
Disney. All right, Disney looks good. Let's see what's working here. Okay, Dow Jones, Goldman Sachs, 3M, Disney, Dow, American Express, Caterpillar, Walgreens Boots, Boeing, Honeywell, and Nike, all higher. Nike. Okay, Nike looking pretty good. Let me just check out Nike. Okay, Nike trying to break out. Okay, nice job there, Astro. I see what you're looking at. Nice, good work there.
It can go higher, but maybe it can't go that much higher, right? It's not going to hit all-time highs, just below 200 bucks a share again over the next 2.5 months. So looked at selling the 190s.
All right, the builders have been seeing a lot of relative volume, high relative volume. Let's take a look at Toll Brothers. Wow.
Just under $6 for that. That'll take your break even just under 181 over the next 77 days. So you only need a few percent from the current share price to 175 to get above that break even. And
okay, Toll Brothers.
when you're buying an at the money call, selling it out of the money call, it's going to be cheaper because implied volatility levels are down, so option premium costs you less. But you definitely need to move higher in this one over the next 2.5 months to be profitable.
Okay, Toll Brothers, big gap up. Look at that. All right, these builders have been doing really well. Let's see, Beazer Homes, BZH. We saw that high relative volume, BZH. DR Horton, DHI. Wow, PHM. Wow. KBH, KB Homes, the Nail, KBH, let's see, XHB. Wow, XHB. Builders.
So you're giving yourself basically about $8 cushion to the downside.
Okay, make sure you're checking out. Literally checking out some positions, taking off some profits into strength. All right, K-Web is much higher. K-Web, Apache. Okay, coming into the week, we had all sectors below their 921, and I believe all below the 50-day. So this change in direction is certainly uplifting, if you will. Unity Software is up 5%. Unity up 5%.
High tickler plus 800.
Reduce more trading as well after a big bounce back in Starbucks. Huge rally yesterday. We'll talk more about it next.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions. I watched my mother being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was hurt, it was hear how much you know until they know how much
Bullish says what's happening to the Lebanese front point deal.
Welcome to Schwab Network.
The Dixie extends forward on the US.
Okay, looking good. Make sure you're taking some profits off into strength. Chewy, I'll look for that to continue higher, Chewy. All right. DocuSign, nice move on DocuSign. All right, let me take a look at DocuSign. I might want to do something here. DocuSign clearing some levels.
Available anytime, anywhere,
On any device for free.
Schwab Network, empowering every investor and trader
Every market day. Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device
US
for
10-year
free.
Treasury yields edged higher on ISM data last at 4.539%.
Welcome back to Morning Trade Live. I'm Oliver Rennick. We do have stocks continuing their rally. Equities are responding very well to a bit of a cool job print this morning. A lot of confidence that the Fed will be done hiking interest rates and the bond market rallying in a big way. Now the entire week,
Israel
straight
PM
up,
Netanyahu
essentially.
says, I tell our
Actually,
enemies to
since
the north,
the middle
don't
of
test
the
us,
end
you will pay
of
dearly.
last week, so like Thursday afternoon is kind of when we put the bottom in, and Friday's stock market held in. So now you can stretch back a little bit beyond this week, actually, as the bounce continues here.
All right, so many of these look really good. Looking for a follow through. We're at the highs of the day. Take some profits off. I would take some profits off, folks. We had a really nice couple of days. Maybe take some profits off and call it a day.
To get another read on this rally and also look at some data. Maybe hit the other data for us first here, Ben, because we do have the ISM, PMI, services numbers. I don't think they're going to move the needle when you've got such a big response already happening to employment, but
I completely agree, Oliver. This is going to be overshadowed by that number and the market's reaction to it, that favorable response to the non-farm payrolls. But after yesterday's ISM manufacturing numbers,
Okay, we're down to 10.5, up by him. Very nice, very nice. Love the smell of napalm in the morning.
Which slipped down to 50.2 from 53.4. They were looking for a slight uptick there, Oliver, to 53.5. But look at this, the PMI coming in here, 51.8. I mentioned again, kind of mixed here. Prices, though, much like we saw in terms of the manufacturing data, 58.6 here, Oliver. A slight downtick from last month's reading of 58.9, but still above levels they were looking for, 56.6. So,
okay, lock some profits in, folks. You got a really nice move today. After yesterday, just feeling a little greedy. Feeling greedy. Wow. Wow, wow, wow. Very nice day. Thank you very much.
Oliver, again, a market that's really trying to make sense of it all in many ways, but I think in many instances, a very strong number for what we're seeing here in terms of today feeds into some of the strength.
all 50 across the board. That's the difference between our services side of the economy and the manufacturing. And the U.S. is primarily a services economy, so the market has known where the strength is, and it shows up. And so there's no real big surprises here, right? The services stuff above 50 means it's expanding. We saw the manufacturing slightly below 50, so there's a little bit of contraction in the manufacturing part for the last read. But then before that, manufacturing was strong. So generally, altogether, stable, surprisingly resilient, particularly on the services side.
Which brings me back to the point earlier that we made is that the Fed right now is really leaning on the.
All right, take some profits off.
Right? And
We're probably going to fade from up here at least a little.
Treasuries doing some of the work for them. What if this number, this economy, and these numbers remain very strong, and we start to see rates come off ultimately? Does that mean that the Fed's kind of found themselves in a situation that Powell warned us about a while ago, where it's too early, and you can make a mistake declaring victory too early, because then inflation becomes deeply entrenched and it becomes more difficult to work its way out of the economy?
That's where I was very surprised to hear the Fed chair give credence to the market's kind of commentary about the bond market doing the Fed's work for them.
Yeah.
Because, I mean, as we can see in the aftermath, the literal opposite has happened now. Stocks are rallying, so theoretically there's a wealth effect there that's a stimulus for the economy. I get that. Look, it's only a couple days. These are loosening financial conditions. The dollar's almost down 1% again today. So dollars just went from the high end of its range to the low end of its range. That's stimulative. The yields coming down is stimulative. And by the way, folks were saying, oh, be worried about crude. Crude's like stuck at $80. So I'm not even really interested in talking about crude anymore, frankly, because all this talk about how crude's here, it's stuck.
Oh my God, this guy's really annoying. Dude, shut up. All right. Hope everyone's having a good morning. Believe me, if I was yapping like that, I'd shut myself up too. Hope everyone's having a good morning. It's the second day of buying. Major accumulation day yesterday. We had 13.5 to 1 up volume at one point. We're at 9 to 1 right now. Tick cumulative is still rising. That's telling you that institutions are buyers, not sellers.
But then the Fed was friendly to the markets as well, where Powell said, hey, that extra dot could be stale, which is the extra rate hike potentially in December. And then the data points, a little bit weaker. Manufacturing, services, and jobs today all adds up to quite a bond rally. We were at almost 5% on the 10-year on Monday. Now we're on 4.5.
It's amazing. And it has been very favorable, as Chris has pointed out, for the overall equity markets. One company, though, and it's by far the most important, at least in its weighting in the S&P 500, is Apple. That stock is still down about 1.4% this after, of course, earnings. Our next guest maintains his outperform rating. He has a price target of 240 and says the stock could be weak on headline noise, but he'd be a strong buyer on iPhone and services. Here he is, Dan Ives. Always good to see you, Dan. All right, why are you still a buyer? What about the iPhone demand at least seems to have heartened you?
Yeah, well, I think when you look at it, the iPhone demand was actually strong, and even in China, and Cook called that out, even going through the December quarter. Now, China was weak because of Mac, iPad. What I view as more noise, the core, the bread and butter here. iPhone demand looks strong. Now growth's going to return. Services.
All right. Good day. I just want to reassess the markets right now. I'm just scanning through a few things.
That the China iPhone demise was going to start. That's essentially thrown out the window. So that's why, to me, even knee-jerk, because this thing's down because of Mac, FX, iPads. We're strong buyers. I view it as really more of a table pounder going into the next 6 to 9 months.
Although analysts were looking for as much as 5% growth for the next quarter.
Okay, let's take a look.
Yeah, and David, to that point, that's really more Mac, iPad, and FX. If you look at actual...
Take a look at the number of stocks trading above the 50-day. That's going to tell us some very invaluable information. Look at this frickin' chart. Oh, my gosh. Triggered. Wow. Triggered on Tuesday. Reminds me of Popeye. Or what's his name? Wimpy on Popeye. I'll gladly pay you Tuesday for a hamburger today. Cartoons back in the day. I don't know where that came from. I'll gladly pay you Tuesday for a hamburger today. All right, I'm having a good time. Sorry. We're at the highs of the day. Take some profits off. Don't be greedy.
We view that as 1.4 to 1.5 trillion. That's 100 billion annually, now growing low to mid double digits, margins double the actual hardware business. Services is the key. And that's why, to me, as a bull, I sit here more bullish on Apple than relative to 24 hours ago because of services and because that iPhone story has really, if you look at it, it's actually strengthened relative to, I think, some of the fears.
But some of your colleagues or competitors, other analysts, are lowering their targets. Citigroup, Davidson, on the guidance.
I love listening to people with their excuses when things are moving in the opposite direction, especially if you're bullish and the markets are moving against you, and you keep finding excuses on why you're not taking the signal. That's a death knell. I just had to mention that because I'm listening to CNBC. What's this guy's name? I forget, but he's really good. He's really good. The guy in the, what was it, green jacket, whatever. From, was it Evercore? Apple's still struggling.
I just got back from Asia, the last 2 weeks, got back 2 days ago. It's a much different narrative that I'm seeing on the ground there. And maybe the perception, I think these numbers reflect that.
Well, there are a lot of different, data points. We kind of try to tend to ignore them. But, in terms of what moves the stock from here, though, and I mean, it is still up 34.6% for the year, far outpacing the broader market, of which, of course, it's the most important part. What is the catalyst, then, that's going to actually turn
Wow.
I think
we're back to 50% of stocks back above the 50 today.
Numbers right now, I think really dropped out. You start to see growth now on the horizon.
I'm just laughing at some people that are pinging me on stock twits.
Now it's double digit. I mean, 15% growth was just a game changer. And that is really the key of the multiplier. And also, it's a gross margin story that continues to go higher. And I think Cupertino here is just in a massive position of strength. And I believe going into the next year, this is a stock that makes all kinds of highs rather than one that is the time to retreat.
All right. Well, we'll hold you to that, Dan. And we know we'll have the opportunity. Thanks for joining us, Dan Ives. As we take you to a quick break, let's give you a roadmap for the rest of the hour. Skyworks amongst the Apple suppliers that are actually under pressure this morning. Cybersecurity names also taking a bit of a hit. We'll get you the stock movers you need to watch.
Sam Bankman-Fried found guilty on all counts in the FTX fraud trial, but his legal troubles may not be over. We're going to tell you why and talk about the fallout for the crypto community.
But after the break, an exclusive interview with Richmond Fed President Tom Barkin. He's here at Post 9 to talk rates, inflation, the jobs report, and more. You don't want to miss it. We're back after a quick break.
All right, so that looks good. S&P, number of stocks trading above the 50-day.
No.
Stocks are in rally mode. Why? Well, Treasury yields continue to fall. It's been the story of the week. The latest move coming after the jobs data comes in weaker than expected. The unemployment rate hitting its highest level since January of last year. This all comes as the Fed held rates steady this week and upgraded its assessment of economic growth. Richmond Fed President Thomas Barkin joins us now to weigh in on all of it. We also have our Steve Leisman, of course, joining us at Post 9 as well. Good morning to both of you. So, President Barkin, first impressions, looks like a pretty weak jobs report. What do you think?
Well, I've been saying that there's been this disconnect between the data we're seeing and what I'm hearing on the ground, and I really do believe in listening to what I'm hearing in the economy. What I've been hearing is normalizing. Labor market in better balance, supply's been getting better, demand's coming off, particularly in places like professionals. It's still hot in skilled trades. You still hear a lot of heat in skilled trades, but I wasn't surprised. Frankly, it was welcome to see that the gradual lessening that we've been expecting is continuing.
So does that mean you can be done raising rates?
Well, you went right to it, didn't you, Sarah? No, I'm not going to prejudge that. I value the optionality of seeing what we're going to see in the data, and in particular, we're going to get 2 inflation reports between now and the next meeting, and I think that's what's going to matter to me.
Well, it feels like you guys want to be done. You feel like you manifest in the economy. Is that accurate?
What I'd say is we want to be done with inflation, but you want to trust that, you want to verify that. So I'd very much like to see inflation continuing to come down. That's what I'm focused on.
Tom, I get to ask the Fed Chair one question. So you have the opportunity here to answer the second question I would ask him, which is, at least in the wake of the meeting, and certainly even before the meeting, the market has begun to price out an additional rate hike. Are you comfortable with how the market is priced in that regard, in the sense that, are you afraid you're losing optionality to come back and hike again?
Well, I'd like to think the market's responded to the data. And so what we saw today was data that showed a gradual lessening of the job market. I think that's what those who would like to not see another rate hike would want to see. We'll see what the inflation comes in. If the inflation comes in relatively high, the market will react, I'm sure.
If it does come in high, this idea of doing one more quarter point, it seems almost superfluous, right? I mean, if you have inflation that remains high, another quarter point ain't going to fix it, is it?
Well, you can say that about every one of the things we do. Is does 25 basis points matter or not? I do think the notion of expectations matters a ton. And if you're going to not respond to inflation when it shows elevated, I think expectations will respond to that. So I'm not sure 25 basis points in the end is the answer to all the world's problems, but I do think if you're going to take care of inflation, you got to respond if it shows up.
You want inflation to be over. But how will you know what's trajectory? So we're at almost 4% on core inflation. You want it to be at 2%. You're not going to wait all the way till it goes down to 2% till you say you're done, right?
Well, I'm focused very much at this point trying to understand the behaviors of price setters. And if you go back to 20, 30 years, price setters have been beaten up by the combination of e-commerce, globalization, access to new supply, and the power of big box retailers. And if you go to 2018, 2019, you talk to those folks, you found people who really went into raising prices, didn't think they had the power to. I'm out there talking to price setters now, and there are some who've taken a step back and said, okay, we're on the backside of this. Apparel would be a good example of that. But I still do talk to price setters who are looking to get more price. Look at the big consumer products manufacturers. They're interesting to look at their earnings. 2019, 2018, price up 1 or 2%, volume up 1 or 2%. In the midst of the inflation era, price up 12, 13, 18%, volume pretty steady. You're still seeing price of those big manufacturers up 7, 8, 9, 10%. Volume's starting to come off, but I'm looking for the point where they're no longer taking outsized price increases because they're worried the volume in the market won't sustain it.
What are you saying? Let's say you're at a dinner party, and I can't remember a dinner party where real estate didn't come up. are you like roundly hated because of what's happening in the mortgage market right now? And do you think it's gone too far in terms of 8% mortgages? Are you leaning too hard now on the housing market?
Well, I go to dinner parties with old people, and old people say, I remember when I used to pay X% for a mortgage. That's the world of dinner parties I go to. I think the housing market, there are a set of people who do want to buy into a house. I do think they're increasingly frustrated by lack of access. I think the home builders, the big home builders are still building at scale, and so there are markets of mine, like North Carolina, where you're still seeing a lot of home construction. But in places where you're not seeing that frustration. I think the broader commercial real estate market is the place where they're not throwing me any parties right now, and there's a lot of noise in that market.
Think a little more into when I follow you, what's really interesting is you lean less on the econometrics and more on what you're hearing and how business works and your ideas about price setters and how they think culturally about it. Give us more of the anecdotes you're hearing about how weak do you think the economy might become here from what you're hearing in your business context?
So what I'm hearing from those who sell to lower income consumers is low income consumers are reprioritizing. They're making choices. Importantly, they're not out of the market. They're still spending, but they're absolutely reprioritizing where they spend and how they spend. You hear a lot about discretionary versus non-discretionary. I'm hearing increasingly over the last 3 months more news of middle income consumers trading down. If you look at Walmart, they have that in their presence. And so the wealthy are the ones who are still spending. I think even the wealthy are backing off of goods. They're still spending, extravagantly, if you will, on services. And so that's what's really keeping the economy going on the high end. Now, we're seeing that consumer spending data that's much stronger than what I just described. And so that's the disconnect that I talked about at the beginning. I still think there's a good chance that what we're seeing on the consumer side is a normal economy, a solid economy, not a frothy economy that would be implied by the recent retail sales or consumer spending. But we'll see. I mean, the data will get updated, and we'll get more data. We'll see what it looks like.
Have you been impressed by some of the productivity data? And is it changing the way you're thinking about the economy's ability to grow?
I'm really pleased by the recent productivity data. Really unhappy about last year's productivity data. You can't, in this era where people left work in low-paid professions and then came back, you can't look at it anything other than a 4-year basis. If you look at productivity over 4 years, it's basically where it was in 2018, 2019. It's a tick better than it was in 2013, 2015. I hope it continues. There's lots of reasons to think it might. People figure out how to do more with less. But we'll have to see whether.
Do you think it's related to AI, even at these early innings?
I think it's too early to give credit to AI. But I would give credit to people in a tight labor market innovating and thinking about how to deliver for their customers with somewhat fewer.
Okay.
Briefly mentioned commercial real estate as least.
Zoned out there for a second. I'm just scanning through stocks. It's just been such a great start to the week. If you just look at this one chart, number of stocks trading above the 50-day, there was only about 10% of stocks above the 50-day to start the week. Tuesday, that changed direction. We went from, just rounding it down to 10%. We went from 10% of stocks above the 50-day to 50% above the 50-day. Why is that important? Because when it gets down into the green zone, that's when institutions most likely start at least considering buying. Look for the evidence. The evidence is when these three turn up at the same time, the 50-day, the 200-day, and the lower panel, and CCI. When all three of these turn up, look for a move. Every time it happens, you get a move. So pay attention. I learned that lesson 15, 20 years ago from Hugh Carwitz, Urban Carmel. Lives over near Sausalito. I forget the town that's just above. I think he's on the local. I think he's a local representative.
Demand matters as well. If you see really vibrant demand, it's hard to make the case that vibrant demand is helping inflation slow. So that's another thing to watch on. You could imagine scenarios where demand comes off and you have to do something. You could imagine scenarios where inflation starts to settle and you want to lower real rates.
Okay.
Imaginary things still feel pretty far out in the distance to me.
When it comes to lower rates, I'd just love you to respond to something we heard earlier this week on CNBC from Jeffrey Gundlach, Double Line Capital. It's one of the more important voices. Basically,
Okay, Apple still hanging out.
ultimately going to be forced to lower rates because to do otherwise, given the refinancing needs of the U.S. government, we're going to be running $2 trillion interest costs.
Nike still going. Nike.
Is that a real factor that you think about?
Nike looking good.
I think we're just trying to get inflation under control. I'm not spending time thinking about government
At all. So it is possible, therefore, if rates were to stay high, that the U.S. government's budget would be basically eaten up by inflation.
Coles.
I think the size of the deficits we have now is something that's getting a lot of attention and should get a lot of attention. And of course, if you reduce them, you'll reduce the interest costs. But we'll see what the various legislators choose to do with that.
All right, Chewy hanging tough. Chewy.
And we asked people to grade him on different things, and he got a D in economic forecasting. You guys missed the inflation on the upside in terms of
Utilities following through from yesterday.
confidence now that you're going to get it right on the other side.
Okay, I'm going to go ahead and close this utility XLU position. XLU.
If you look at my forecasting, I'll just talk about myself. I didn't see inflation persisting for nearly as long as it's persisted. I did see the risk of a volatile market around the reopening of the economy, but I mean, I thought that this would settle more quickly too. So I'll take my share of that grade. And I think pretty much around the world, people have that. That's an important question. Why is it that we collectively as forecasters didn't see inflation persisting? And I think it has to do with the way one thinks, but it hasn't been there for 30 years, right? And so the sense that expectations would settle so quickly. What I believe, going back to what I said before, is that there were price setters out there who didn't think raising price was a lever. If you're a business, raising price is your most valuable lever. It's the quickest way to make money as long as your customers don't.
All right, let's see what we got here. Utilities XLU. I'm going to take some off here if you're thinking about it. We're right at the 100 period. I'll scale out, taking some off.
What I'm hearing is it's going to take a while for them to come back to the behaviors.
10-year yield doing your work for you?
Financial conditions help do what we're trying to do. We try to, through our rate moves, affect the financial conditions.
Okay, so you got about
Financial conditions are affecting the economy.
14%.
It's not really a policy variable, but pretty volatile. We don't control.
Okay, XLU.
Took some incoming this week from Stanley Druckenmiller for not issuing more long duration when rates were lower. She responded last night by saying that actually portfolio duration is the longest it's been in decades. Do you take a side on that today?
I'm pretty clearly not going to take a side.
Do you think we've seen the highs in rates?
I don't know which rates you're talking about, but
Fed interest rate and market interest rate.
I don't know.
I'm just asking in a different way.
Yeah, okay. It depends to me exactly on what happens to inflation. And I'm watching that closely, and I'm very hopeful that we're nearing the point where we can get it under control, but the markets will tell us that.
Is there a big disagreement inside the Fed right now between those that are worried about inflation sticking around longer and having to potentially do more and those that feel like they're done?
The great thing about our committee is you get a lot of views at the table and people take those. I think it's a consensus-oriented committee, though, as you've seen from the votes over the last couple of years. And so everyone puts their view on the table, we kind of work it out, and I think we've so far been able to come to a pretty strong consensus.
Let me ask you another way. Great question that Sarah asked, which is, do you have to be convinced to hike, or do you have to be convinced not to hike?
I don't prejudge the answer. As you know, we've got a meeting in 6 weeks. I think we just got out of the last meeting. And so, I'm saying we got out of the last meeting. Let's get 2 jobs reports. Let's get 2 inflation reports. Let's get a consumer spending report. Let's see if the things that I think I believe today are still true. And so I think we've got a lot of time.
All right, one more way. Is there over-timing or under-timing right now?
They're big risks.
They're both big risks.
Sure. And by
And
the
then we're in balance.
way, there's also a risk that some boulder comes in from left field and it takes on the economy in the way that the pandemic did. And so you're always dealing with under-tightening risks, you're always dealing with over-tightening risks, and you're always dealing with the risk that perfect policy can get waylaid by something that comes out of it.
Speaking of boulders, we haven't asked and you haven't brought up geopolitical tensions. Is that not something that's high on your list now, risks out there?
Well, when you start seeing a conflict in the Middle East, you start thinking about oil prices. it's very familiar for those of us who lived through the 70s that an oil price spike has issues. Now, our economy is different than it was in the 70s and all that stuff, and we produce more. But yeah, you constantly monitor it. And I've been pleased that so far it hasn't really spilled into that part of the economy. But that's absolutely something to watch. When I talk about boulders, that's a classic example of a boulder.
You did well. 4 on 1. Not bad. Tom Barkin. Thank you very much.
Good to be
Really
here.
appreciate
Thank
you
you,
coming and sharing your views and what you're hearing. The president of the Richmond Fed.
Coming up after the break, Goldman's chief economist Jan Hatzius will weigh in on the jobs number and some of the comments we just got from President Barkin. We'll get his take, obviously, on productivity, bond duration, and a lot more of the topics we've been discussing for the past few minutes. We're back in 2.
This stream is sponsored by TickStrike. TickStrike allows you to actually hear order flow futures, forex, and stock instruments. Get a free trial at tickstrike.com.
All right, so S&P consolidating right at 43.50. Now, if we hold 43.50, that would be freaking awesome. I don't think we are, but probably maybe a short up here. The only problem is that we have momentum clearly bullish. Tick cumulative is still rising. All right, so basically I'm just sitting here, collected a lot of coins this morning, and just reassessing the markets, what we're doing. Let me just take a look at alerts. Moderna, lower. What's Moderna doing? Moderna. Let me just go through some of these. Moderna. All right, gapped up. TJ Maxx. TJ Maxx looking strong. Okay, if we get a little dip back to the 50-day, I'd probably be interested in TJ Maxx. It has earnings in 2 weeks on the 15th. Airbnb showing 1.6 times RVOL. Airbnb. I noted real estate stocks are moving higher.
I thought it was broadly weaker than what we expected, and I think if you look at the reaction of the bond market, clearly weaker than what the market was pricing in. And I don't think it was weak in a very concerning way. We still printed 150,000 headline payrolls.
CyberArk. I also noticed Palo Alto Networks. CyberArk. Watch that.
But if you adjust it for the definitions of the payroll survey, it's actually up somewhat. So it was a softer report.
Carvana looks like it's going to keep going.
The message that the market took out of the FOMC meeting this week, namely that the Fed is very likely done.
CVNA, Carvana.
I wasn't particularly concerned
Came back to this breakout zone, pull back to breakout. Took a while to get there. And the 200-day volume starting to pick up. So that looks good. They make $6,000 per vehicle gross profit. Gross profit $6,000. I don't know what they figure in. I guess with transportation and everything, they net $2,500 per vehicle that they sell. I don't know. That sounds like a pretty good profit to me. I don't know. I don't know enough about the business, but so if you take 6,000, what's that? 30%, nearly 30% of the gross. Everything else is what? Overhead, paying employees, delivery charges, gasoline. They make $2,500 net per vehicle. So I guess if they did better on their costs, like for deliveries, maybe if they delivered more than one car to an area or something like that. Because whenever I see these cars for Carvana, I see a flatbed truck with one car on it instead of multiple cars. Maybe they could do something like that. But regardless, stock's moving higher today and yesterday. Okay, looks pretty good. Carvana. Nike just keeps going. Nike is still going. Okay, Apple popping. Apple popping off the lows. Apple. Apple starting to pop off the low. Apple.
What would cause you to get a little bit more worried about the downside risks as we do start to weaken here?
That's right. It is consistent with that baseline. What would make me more concerned? I mean, obviously, you always want to respond to high frequency data. I'm not seeing anything particularly concerning there. What are potential
Shorts are starting to cover on Apple. Apple shorts covering. Keep an eye on them. Maybe it gets going.
Something to watch. And I think the adjustment to a more normal real interest rate environment after 15 years of very, very low real rates, I mean, we are still in the process of that. And so that could certainly cause some adjustments. Housing is an obvious place where we probably will see more weakness. Commercial real estate also already came up. I do think that's probably more of a multi-year adjustment, but those are the things to watch.
Orkin says cuts may be a long way away. Powell says he's not thinking about it yet. When does the first cut happen, in your view?
Again,
all right, so it looks like Sunrise Trader is looking at Schwab. Gap up and fading. Gapping up and fading. All right, Charles Schwab. You could see a double bottom here. Let's go take a look at SCHW. And let's look at the point and figure. I think this is something good for new traders to understand. Look at point and figure. Okay, so we're on a buy signal. Okay, that X right there. We moved above this 54 area. We got multiple levels of support pushing back in the opposite direction. The concern about banks and in particular some of these brokers like Charles Schwab, there's a lot of concern. For now, I'm just looking at the price action. NIMO is at nosebleed levels.
To the high side in a number of ways. Nice to see some of your potholes, though, get paved over here for Q4. We're not calling it a speed bump. Yeah, thanks. Good to see you. Thank you very much.
Well, still to come, we're going to talk about Sam Bankman-Fried, of course, who's found
Sam Bankman-Fried, seven counts. He was guilty of 7 counts. Man, can you imagine going from the heights that kid was at? What is he, 30 years old? Something like that? Jesus. Shaking hands with Tony Blair and Bill Clinton and despite what you think about them as politicians. It's just, man, what a flame out, man. That's just, and it could have all been avoided with good risk management. Yeah, yes, I saw that. I saw that. Hmm. I did see it, Stephen. Yeah. Risk management. It's so, I hear it so many times, well, it's probably going to reverse. Really? It's probably going to reverse. Is that an opinion? Because if you're trading on opinion, that almost always gets you in trouble. Try to formulate my this is just my opinion. You don't have to listen to me, but try to formulate a workflow that identifies money flow. Where's the money going, and what um, velocity, and what volume, and why. Try to identify why money is flowing. Yesterday we had 9-to-1 up volume at the close. So what does that mean? It means that was a major accumulation day. It's pretty obvious when stocks get down to 10%, 10% were above the 50-day. 90% of stocks had dropped below the 50-day. Like 30% of stocks were above their 200-day. 70% of stocks had dropped below. That's telling you something. What is it telling you? You can learn lessons from people in the trading room, not just myself, but other people in the trading room. That told us that there was more than likely going to be a reversal in the short term. Now, you might say, oh, that's hindsight. No, not really. This is not the first time we talked about this particular indicator. Over the years, I must have talked about it at almost every reversal point. But this is just one of many indicators that can get you on the right side. All right. So you're looking for a bullish trend. Now, like a lot of people are saying, they're going to short this. Well, yeah, I could see we get a little bit overdone to the upside. But when we get down into this green zone, at a minimum, you want to start looking at potential setups. Okay. You want to look at the FANG index, these top 10 stocks, that we like to trade. All right. You want to pay attention to those because there's a very good possibility you'll have a good setup. Okay, here's the New York FANG index, those 10 stocks. All right, so a bullish trend, stochastics turning. Where's the money flowing? It's flowing back into stocks. Why? Well, one reason is because it's the seasonally strongest months of the year. This is data. This is not my opinion. Okay, this time of year, we start to see a flow into the markets. Okay, now it's a little late, started November. We got 2 weeks until it really starts to get jiggy into Black Friday. Now, this potential for November, December, is that enough to take a trade? No, you want to look at a few other things. All right. So here's stochastics is confirming the only way this is going to move higher is if stocks are trading in the upper half of the daily range. MACD changed direction because momentum based on price is bullish. RSI is back above 50. So what is that telling you? It's telling you that the strength of this trend is improving, not weakening. Let's look at a few other things. Let's go look at advanced decline percent. Are more stocks advancing than declining? Yes. Are we near extremes? Certainly are. Okay. NIMO is at plus 97, I think Corey just showed me. 97% of stocks. So NIMO, let's look at NIMO. Trust me, if you just get this concept, this idea, I know some of you are probably bored with me talking about this every time. You've been around for a while. Some of you have been around since March 14th of 2016. Some of the original members. It's been a long time. You guys and ladies have been around a long time, so I appreciate it. I'm sure the people in the trading room appreciate it, the ones that ask the questions, new traders. But look at NIMO and NAMO. That black line is what I'm looking at. Look at the green elder sticks up above. That's the New York Stock Exchange. Yesterday, look at the size of that candle yesterday, or stick. It's a green elder stick. That means there's more buying pressure than selling pressure. NIMO's is climbing. That line is headed higher. It's not peaking. It's not flattening out. Look at NICE in the lower panel. That's the summation of all of the NIMO values over time, starting to turn. So that's going to be a tailwind right there. So it could see a follow through, even though we are a bit extreme and looking for a little bit of a pullback. Look at NAMO for the NASDAQ. Same thing. All right. So let's look at what else? Oh, let's look at bonds. Let's look at bonds. Where's the money flowing? Is it flowing into bonds or is it flowing out of bonds? Is it flowing into yields or out of yields? Okay, so let's look at it. Here is the 10-year. Remember a couple of weeks ago? Actually, for the last few months, I've been saying that we need to see this drop off like it was in August and lose the 21-day. Guess what? We might even be losing the 50-day today. Why would that be the case? Well, many people believe that it's because the Fed is done raising rates. They'll keep them high for longer, but the bond market is telling you something right here. And when the bond market speaks, you better pay attention. I'll say that again. When the bond market speaks, pay attention. It's twice the size of the equity market. 2 times the size, more than 2 times the size of the equity market. I'm talking about all sovereign debt, not just the US, but everything. Twice the size. Now, the Forex market, currencies, dwarfs both of those. The currency market trades in the trillions of dollars every day. Trillions every day. Don't believe me? Go look at different sources. You can find them on the internet, right? And you know everything on the internet is true and unfallible. But look at the US dollar. Okay, RSI, the exact opposite of what the S&P 500 is telling you right now. We have S&P 500, the Qs, NYSE, IWM, Dow, all saying the same thing. RSI is rising on those indices and dropping on the dollar. If the dollar continues to drop a bit more, that's tailwind for equities in the short term. If it continues to drop, that would be even more bullish. Now, we don't want it to drop too much because there's a lot of people that think that devaluation of the dollar and all that crap, you know, they get on their tirades. But the money is flowing out. The point I'm trying to make is money is flowing out of US dollar and out of the 10-year. These two have been the thorn in our paw. Okay. The bull's hoof, the thorn in the the bull's hoof. That's been the thorn. So, yeah, we're probably a little bit overbought right now, probably pull back. So, we want to look at VIX. VIX is starting to reverse. Okay. So, these will probably reverse intraday, but the momentum is clearly bullish at the moment. Look at the US 20 year. US 20 year. The reason why I'm calm and collected during the day is because I've got a system that I've been using for over 20 years that makes sense. You know, it's where's the money flowing? Why is the money doing what it's doing? All right, here's the 20 year. Let's look at the 10 year, US 10 year. And what I'm telling you over the last 10 minutes is exactly that system. All right. Now, I could probably program an algo to do this for me. I just like being in the markets and like participating. Okay, so, okay, Molson Coors, near the highs, Coors, K Web. Let me just go through my stocks real quick, see if there's anything fading I want to take off. I'll finish this up in a second. All right, here's the 10-year. All right, what's the VIX doing? VIX starting to turn. All right, so we're starting to see a little pullback. And if the S&P drops below this 43.50, we could see a move back down to 43.30. All right, so maybe you want to consider some puts. A little overbought intraday. Maybe we pull back a little bit. What's that? Today's Friday. Oh, shoot. Friday. You know what? I'm not going to trade this. It's probably going to pull back. So if you're thinking about puts, go for it. What else? Okay, so the FANG stocks, the New York FANG index. While we're waiting for the markets to, looks like profit taking. I would think profit taking because the market momentum is more bullish than bearish. Not like the last few weeks where, the markets were moving lower. So any resistance level that we would be at, I would look for an acceleration to the downside. I'm not looking for that right now. I'm looking for just profit taking. VIX is pushing higher. There's probably people that think this is too far, too fast, and we need to pull back. I could see that. I could see us pulling back. I'm not going to trade it. I'm just going to manage my existing open positions and consider taking some things off the table. All right, Nike looks pretty good. All right, let's look at this list of stocks. Okay, we're pulling back a little bit more. Maybe I'll take a couple of puts. Let me just take a couple of puts here. All right, so $1 or $2 out of the money. SPY. Let me take a couple of puts here. Looks like we're going to accelerate. Maybe the 432. That's only $1 away. 432 or 50 cents. All right, I'll buy a couple of these. I'm going to hold off on buying yet. I want to see if this is in fact just profit taking. All right, so here are the top 10 stocks. All right, these 10 stock. I got AMD in here as well. These top 10 stocks. I do have AMD in here as well. Here's the top 10. New York FANG. Okay, so I didn't take the puts. I didn't take the puts yet. I'm just going to wait and see if this is just short covering or rather profit taking. Okay, so here are these 10 stocks. Oracle's not one. Probably should take that one out, but Oracle's up today. Did I change it here? I probably changed it here. No, didn't save. Okay, I only want the top 10 of these. Okay, let me just edit this list because these don't belong in here. Adobe, AMD, Berkshire's not one. Neither is CrowdStrike. Oracle's not one. PayPal's not one. All right. Shoot. Delete that. 1, 2, 3, 4, 5, 6, 7. Okay, that's the top 10. All right, these are the 10 New York FANG index stocks. All right. So it's an actual index. And everything but Apple is green. Is that bearish? Money flow again. Money flow. Not really. Doesn't look bearish to me. All right, here is Snowflake, Tesla, Apple. Apple, 2 steps forward, 1 step back, right? I got a feeling Apple's going to actually close a bit higher than it is right now by the end of the day. All right, so that's Apple. Amazon looks good for the follow through. If you bought it yesterday on the dip, yesterday we bought Apple on the dip over here, right over here. We were looking at ABCD pattern. Okay. And we did reach the highs. If you took Amazon off at the high of the day this morning and you're looking to get back in, you're looking for this little dip, same like yesterday. Here's A again. Here's B again. Looking for C and D, just like yesterday. Here's A over here on the left, far left. B, another C, 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 D, 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 D. Okay. Where's the money flowing, folks? Ask yourself that question. How much am I down? Am I down 5%? Maybe you want to exit the position if it didn't do what you thought it was going to do. Risk management. Sam Bankman-Fried could learn a few things from people in the trading room. What was his risk management? I mean, you get into trading Bitcoin. They actually thought Bitcoin could never go down. I watched that Bloomberg special called Ruin, Ruin, Ruin. Very good. It's another one. It's just all the people that interviewed him over the years, and some of their executive officers. Yeah, I agree. I agree. That picture on the left, though, Field Marshal Yoda, I don't think that's really her, is it? I don't think it's her. Her teeth look different. I think it's just it's making a point, definitely. Risk management. Watch NVIDIA here. Watch NVIDIA. I see you guys talking NVIDIA. Okay, let's see. Whoa, Tesla. Okay, Tesla. All right, NVIDIA on the move. NVIDIA going. Google. Google. Apple. Microsoft. Okay, Microsoft's still going. Okay, Microsoft. I have a put credit spread on Microsoft. I'm probably going to take that off. Microsoft. Let me see what the profit is on that. Okay. I'm going to go ahead and take this credit spread off.
Happy Friday. Welcome to Squawk on the Street. I'm Sarah Eisen with this broadcast live from Post 9 at the New York Stock Exchange. A lot to get to this hour. A Goldilocks jobs report. Economist David Rosenberg here with the breakdown of today's numbers and what it means for the Fed as the debate over a December hike continues.
Plus, an earnings triple play. First up, cash. Block CFO with us with a look at the company's blowout quarter and the future of fintech.
Then the consumer, the CEO of Restaurant Brands on spending trends, inflation, and, quote, trying to reclaim the flame at Burger King.
Finally, the chip trade, the CEO of Microchip on the state of the sector as the industry tries to recover from what was a rough
Okay, Microsoft, that bull put credit spread. I'm going to take the money, collect it, bank it. Okay, so I'm out of Microsoft for now. It does look bullish, though, Microsoft. Okay, so yesterday I was looking at Microsoft, and there's a lot of ways you can trade a bullish position. Because it was Thursday, I wanted to capitalize on theta. I sold the November 17th 340 put, and I bought the 335 put for a credit. all said and done, nice profit.
Well, I think that it does signal a significant loss of momentum, which is, I guess, a no-brainer considering that we came off 4.9% GDP in the third quarter. The Atlanta Fed, I think, really kicked things off, Sarah, cutting its number down to 1.2 for the fourth quarter.
Okay.
If you believe that number, you had to believe that employment was going to follow suit. So today's number didn't surprise me. I think the downward revisions really help explain why we had that outsized, but really what proved to be an artificial run-up in the previous 2 months. But I think that the economy is losing momentum, and I think that the people that threw away the recession call into the garbage bin because it didn't happen yet.
Okay. So Microsoft, you could have been long the calls or shares or done a buy right, whatever. There's a bullish trend on Microsoft. Let's see. S&P hanging out right at support, 43.50.
That doesn't necessarily mean we're going to head into recession.
That's today's narrative. Firstly, the recessions always start after the Fed is finished with this tightening cycle. The recessions don't usually occur while the Fed is still tightening. And so those are the lags. And actually, I think those of us that were wiping eggs off our face because we were calling for recession a tad too early reminds me a lot of what I was saying back in 2007. I was early to a fault. But the recession came in December of that year. I mean, to say recession is not going to come after the most pernicious tightening cycle since 1981, to me is a low odds bet. The reality, when you look at the historical record, is this: the recessions actually start 2 years after the Fed's first rate hike, and the Fed's first rate hike was
Nike at highs.
On this business cycle in the first quarter of next year. So I would say that we're building up towards it. We've been in a soft landing. I don't think a soft landing is a permanent state of the economic cycle. The soft landing, which can last a year, and we've been in a soft landing, but the soft landing historically is just a bridge between the economic expansion phase and then the contraction phase, which I think will be next year's story.
You remind me of Deutsche today, David. They write, we've been in the hard landing camp for almost 2 years.
Okay, where is, I told you yesterday I was looking to start a iron condor 6 months out on IWM. Once we get near 180, we're close. Okay, so what I'm thinking about is selling calls right near 197 and buying calls above that, and then selling, say, 162 puts and buying the 160 put for a credit, and that creates an iron condor. So what I'm looking for is price to stay between these two levels. Okay. Oh, you know what? Before I do that, let me just go through the FANG stocks. Let's see what these look like. I'll come back to that in a minute. Apple, of course. Amazon, bullish. AVGO, Broadcom, bullish. Google, bullish. Microsoft, of course, bullish. Meta, neutral to bullish. Netflix, bullish. Nvidia, bullish. Snowflake, neutral to bullish. Tesla, bullish. New York FANG Index, overall, bullish. It's above the 50-day. Oh, boy. If you made a nice profit over the last couple of days, maybe you want to consider taking the rest of the day off. Take an early lunch. Go hang out with your friends. Enjoy your day. If I could, I would. I just leave right now. The day, you can feel the momentum. It's just Woody is quiet. The markets are at highs. The bears are in disbelief. They're jumping up and down. I think a lot of bulls that were hanging on by a thread at the lows, probably in disbelief too. Take the rest of the day off. You enjoyed it. You deserve it. Okay.
I think Apple's guidance was something you didn't mention that we can throw into the mix. And then in the next few weeks, we'll be hearing from Walmart and Target and Macy's, and I think that their guidance is going to be very important.
All right, we're fading. We're probably not going to make it much higher. Okay, let me go through some stocks. What was I going to do before? I was going to shift gears. All right, let's go take a look at the S&P 500. S&P. Okay, we're at the 50-day. I thought we were going to stop at the 200-day. We did actually stop at the 200-day on Wednesday. And then yesterday was just forget about it. Look at RSI. What does RSI say? No, if we start to fade like crazy, for some reason, we got 4 days of excellent volume, above average volume, 4 days. We bounced at a previous breakout zone, 4150. Okay, that was the breakout zone in May. Came right back down and tested it. After gaining 32% on the year, we pulled back, what was it, 11, 12%? Let me just, now we're leading into the seasonally strongest months of the year. This is the seasonally strongest time of year when the weather outside is frightful. Hunker down. The weather outside is frightful. Let it snow, let it snow, let it snow. Is it snowing by you? Let me know. I like the snow, as long as I don't have to shovel it. Okay, so here's MACD. Okay, so MACD is telling you that it's the the bulls to lose. Okay, the bulls don't want to drop the baton now. Stochastics, that's telling you that price action on a 14-day rolling basis is closing on average in the upper half of the daily range. 14 days. Okay, so we've already started 5 days and we're closing in the upper half of the daily range. Understand what your indicators are telling you. So we started that this week. Tuesday, that gave us a crossover. Tuesday, followed through. Look at the 9 and 21 day, turning up quickly. We are stalling right at the 50-day. So that could be a big deal. We're near the upper trend line. July was the high. We bounced at in between 382 and 50% Fibonacci. I'm just going through the different indicators. The ranges are increasing. You can see ATR below the green line here, green shading. That is, let me just anchor this. That is rising. So the ranges intraday are rising, increasing. Okay, we got very close to that green box right there, 4055 put. That was the JP Morgan. It is the JP Morgan December collar. That's the midpoint. The low point is the 3420 put. 3420 put. And the upper end, they're short the 4515 call. All right, so they basically have, JP Morgan basically has covered calls up there at the high. Okay, so 4350 was resistance today. That was the upper resistance. We're right at that right now. Now, what would blow the bears' minds is if we don't drop off. Now, I was thinking about taking puts, if you recall, but I said, you know what? Because the momentum, these two momentum indicators are bullish and RSI is rising, I'm not going to fall for the trap of thinking this is just going to roll over and die, because the momentum is clearly on the side of the bulls right now. So I'm not looking for a big reversal, a shooting star or whatever. Not yet, anyway. Volume would have to drop off dramatically. It has dropped from 13 to 1 to 5.5 to 1 up volume, 4.75 on the NASDAQ. So NASDAQ is staying pretty strong. And with that, I'm going to stop talking, yapping so much. I'm going to take a few minute break. I'm going to go stick my head outside, get a breath of fresh air and some sun on my face. And I'll be right back. I don't think the market's going to go to hell on a handbasket. If anything, it looks like it wants to go higher. I'll be right back. Coffee break.
Well, I'm kind of reminded of how it kind of feels to me like the Fed's looking for someone to do the work for them in some ways. They don't want to take the blame if they do too much work and break the economy. It was just regional banks a while ago and the tightening in terms of financial conditions. That was going to do some of the work for them. Right. Now it's higher yields in general. Again, what has me a little bit concerned here, Oliver, is that with rates, with inflation at the level it is, there's still more work to be done here, yet we're being patient. We're kind of pausing right now. Many people are scratching their heads saying, hey, basically get back to work. Let's get inflation down to these levels, and then we can start to cut aggressively rather than wait and let the market kind of do the work for us.
That's where we were talking about this morning, which is we got to hope inflation comes down.
Absolutely.
I mean, look, if it does, then holy cow, Powell looks like a total genius.
Absolutely.
And everything's perfect. But the numbers right now are still too high. I mean, they've got to start coming down.
Or we're in a situation I presented earlier where Fed kind of gets what he was worried about, where we call victory too early and we have a situation where inflation becomes more deeply entrenched for a longer period of time.
That's what Bianca was arguing, is that really no matter how you slice it, just the math of the strength of the economy, wage growth, all adds up to yields being above 5% at least.
Oliver, I've been on the road a couple times over the last few weeks, a few road trips. I've never seen as many trucks on the highways, just packed full. I mean, this is an economy that's chugging along.
Yeah, right. And the data shows it. Services data continuing to hit above 50. Thanks for the numbers, Ben. Appreciate the update. All right, let's talk some more stocks and some of the big earnings winners. Yesterday's move in Starbucks was an epic comeback. Let's bring in Kevin Green. For a little of the aftermath, this was kind of a fun winner this week, Kevin, because it's a straightforward business that I feel like just got a lot of negativity swirling around it. And then it's like we extracted that in a single earnings report. What's been the response to Starbucks' big rally?
Yeah, we have seen the shares up around 12% since the earnings announcement here. And Oliver, I think you are right. I mean, the market was really concerned about the strength of the consumer, especially on the international stage. And we actually did see some bright spots in China as their pricing power has been able to really drive revenue. And even though we are seeing an increase in store traffic in China, they are seeing the average ticket, the average ticket actually come down just a little bit. But once again, we are still working on that reopening story for China, and they continue to double down when it comes to their international strategy. In fact,
today we're a little bit above it right now, but with every excuse in the world that it has to go up, it's still not going up, and so I'm going to fade those until I'm wrong.
All right, so Ben, Mike's not a believer in First Solar. Kind of easy to see why when you look at the performance year to date. But take us through the chart. Anything that maybe doesn't look quite as bearish to you?
No, Caroline, it's been tough to find a bright spot in shares of FSLR, that's for sure. Mostly range bound as of recent, but definitely in a well-defined trend environment to the downside. Let's dive into, first and foremost, a 4-hour candle chart. I avoided the more intraday time frame on this one because it's very limited in terms of real conviction. I mentioned a very much chop type trade, and you can see that in terms of some of the price activity you've seen this fall. But I wanted to begin with the move we saw throughout June, July, into August, and the beginning of September, where we traded around this $200 level. So you can see not a lot of conviction, and then you see the sideways breakdown. So the move into the beginning of October, where we started to go a little bit more sideways again around the 145 level. So from what I'm seeing here, you've kind of got this upper extreme around 160 where you've run into some resistance. You got a very well-defined low around 132, but the first line in the sand for the bears in terms of some of the weakness would be, again, that 160 level, but everything below 200 right now is still in a trend environment to the downside. Let's take a step back from this 4-hour candle chart here, and although we've got a fair amount of time on this chart, again, going back to, we're talking this summer, I wanted to show you what's going on because FSLR actually was in a bit of an uptrend. And that's why we look for these areas of value, because while we were trending higher, value is forming at higher and higher levels. So those that are looking to participate with the trend are going to be favoring long positions. Again, as we're forming this area of balance around 93, we're talking about into the both basically throughout most of the year of 2022 into the fall of last year. And then we break out. You can see these areas of consolidation that continue to form at higher and higher levels. And as each one forms, you're constantly referencing the prior. So while we were bouncing around 200 into this summer prior to the breakdown that we just looked at, again, some of that weakness, you can see that 157 was the key level. So taking out 157, definitely washing out or invalidating that working assumption here that value was moving at higher and higher levels. The market was trending higher. So this one's been in a bit of bearish pattern for a while. Again, in a bit of a range, but definitely not necessarily anything to get the bulls excited about at this point.
All right, so it sounds like we have some agreement. Mike, let's talk about your next trade, Shopify. It's off about 0.4% despite beating on both the top and bottom line yesterday. Tell us why you're trading this one.
So a continuation from yesterday's earnings report. We're seeing strong consumer spending. We're seeing expanded growth across the board, basically, from that we talked about in your last segment. And then Shopify's at a great spot for that. So I was looking, actually, it did trigger. I'm looking at it along above 60.15. It actually spiked up about this morning, came back a little bit, so we can get that maybe for a little bit cheaper. I'm just going to go with a straight vertical spread. I'm going to go with the 62.65 call spread, and that should be trading, I would imagine, somewhere around 65, 70 cents. I haven't updated since we've got on here.
Okay. Ben, Shopify currently trading at 59.50 right now. What do you see in the chart for Shopify? Because this is a much different story than we saw for First Solar. This is a stock that's up 71% so far this year. I'd say so far this year. I guess we're closing in on the end of the year, but in 2023.
Yeah, similar in that we're in a bit of a trend environment to the downside on the longer term, but different in terms of what we've been seeing on the more intermediate and more recently, definitely on the short term, a spike up to say the least. And Shopify, a bit of a mess, though. I'll show you why when I get down to these different time frames that I'm focused on. But let's begin first and foremost with this chart, that hourly candle chart here. You can see the move lower that we saw over the last few weeks into the lows just last week, and that was up 45. We spiked up, currently holding around the $60 level here. But a minute ago, we were just talking about First Solar and how they had invalidated that uptrend in the recent weakness that we had seen, that selling. Well, in this instance, kind of a mirror image. Shop invalidating a downtrend that we had been seeing with this most recent move up. Because, again, looking at these areas of consolidation, we were balancing around 53 into the lows. We formed a really well-defined area of consolidation around this 47 level. And then look what's happened with these earnings results. It's taken out key areas associated with areas that were established on the way down. So taking out 53 means that the working assumption that value is forming at lower and lower levels and is going to continue to do so is no longer a valid one, right? And you're kind of just guessing and hoping if you think the market's going to roll back over and get back down to that 47 level. Might it? Yes, but this is a good indication that significantly conditions have changed, to say the least. Let's take another step back here, because this is, again, a very, in many ways, a more granular time frame I want to look at here. I've got a 4-hour candle chart here. I said it was a bit of a mess. Not a lot of well-defined trend here, right? We had migration moving up into 71, and then we kind of broke down. But notice how we never really took out 48 with any real conviction here, right? And then we came back up. So, this just doesn't provide much of a lean one way or the other. I always say, when in doubt, zoom out. And in this instance, you get a fair amount of clarity, right? We're talking about what I mentioned before in terms of much like First Solar, this longer-term trend to the downside, well-defined. Top left corner, Caroline, bottom right, you can see most of this has just been kind of consolidation around this $50 level. But as long as we remain below 88, these most recent tops that we just came off of up around 80, they just look like additional sell opportunities similar to what we saw back in the beginning of 2022. So it's a well-defined range that we're established, higher upper and lower extreme, kind of hanging out in the middle thereof. Everything within this right now is very random, but supportive of the downtrend here still.
Yeah, when in doubt, zoom out. Certainly puts it into perspective
Sure
in
does.
terms of move. Impressive this year, but not so much when you look at those old highs. All right, and finally, Mike, your last trade is for Oracle. It's up about 1% today, 1.2%, up about 7% this week. Tell us how you're trading this one.
Yeah, so I continue to like the enterprise and the cloud space in general. And the interesting thing is Oracle has earnings December 11th. Okay, so what I'm going to do here is it's a technical trade in that I'm long Delta, so I'm bullish on the stock in a more grinding type of fashion. But almost more importantly, the way that I'm playing the options, I'm buying the 110 strike in December, which is after earnings, and then I'm going to sell the regular November 111 calls. So we have a dollar embedded in that call spread, and then we also have implied volatility after that we're buying, and so that's going to hold its value and probably will go up going into earnings. So that's going to help the long part of that, and then going out 2 weeks and just selling that basically to finance that long call. The decay of that, we're going to have a lot more in the front. So a grinding type of move up to its 50-day moving average up at around a 111. That makes sense technically, and it's a great trade from the option side.
All right, Ben, December 11th, Oracle's earnings. I get to share my birthday with Oracle's earnings. I knew that date sounded familiar. All right, take us through the technicals. What stands out to you for Oracle, Ben?
Well, Caroline, I had a feeling that I'd be able to see a little bit more eye-to-eye and agree decidedly with Mike on this one, because all time frames across the board pointing in the same direction. Taking a look here at the more granular, as we like to do, first and foremost, dive into the 5-minute chart with me and just look at the move we've seen off the lows from last week and the strong rally we saw up this week. We started out around that 100, 101 level, and then look at this big move up all the way up to 109, and you can see high conviction trade associated with the big move into the end of the week. no rejection of that. We're seeing us hold these upper levels here as of currently into the midday trade. And I just want to show you along the way up, the market establishes these areas of consolidation for us to keep an eye on and for us to reference. So again, if you're looking at where value is moving here, it's giving you a pretty good indication here that it's moving higher, right? So those that want to position with trend right now are favoring long positions and currently looking for opportunities to present themselves as we balance around 108 and hold above 106. That's the area where you don't necessarily want to take out at this point. Supportive of that working assumption, the value continues to move higher, and that continuation more likely than change, right? Well, that is the case, and it happens over time, and that's why this is a good working assumption to take on as a trader, right? It is, again, sometimes important to trade counter trend, but I personally like to position myself with this momentum to the upside. Now, in this instance, I want to paint two scenarios here because you can see a bullish pattern playing out. And then as we balance around 120, notice how this isn't necessarily what the bulls wanted to see, right? Lower lows, lower highs coming into play. But notice we're still holding above that key area 88. We always reference the prior area balance relative to the one that we're currently forming. Now, in this instance, I want to show you, giving the benefit of the doubt to the bulls, I kind of pulled out the fat crayon on this one and just sort of identified as this is one larger area balance. 88 still being significant, but again, not so much just this one area around 110. We sort of adapted this to just being this larger area here. Yeah, we're below the daily pivot at 112, but back above that, let's go and retest this old high that we saw around 127. Now, the reason I'm so willing to give the benefit of the doubt to the bulls here is not only because of the 5-minute time frame, and again, in this instance here, but I looked at the
All right, looking pretty good. Starting to move a bit higher.
This is a textbook example of what a trend environment looks like. And yeah, again, the recent weakness, not necessarily what the bulls wanted to see, but look where we are. We're kind of right back to one of those old highs. We could find some support here, start to kind of balance in this range here right now. Again, this would be just absolute trend to the upside. Technical analysis 101 playing out here. This is something to keep an eye on into the end of the year, that's for sure.
Good points to make, Ben Lichtenstein, Mike Shore. Thank you both so much for the technicals and the trades. Really appreciate it.
Considering this iron condor on IWM, this is what I'm looking at. Selling the near money, puts and calls, and selling and buying the out of the money on either side, above and below. Looking for price to stay in between this range between now and say December 29th, end of year. So we have how many weeks? We got 1, 2, 3, 4, 5, 6, 7 weeks to go. 7 weeks to go. And what's the ATR each week? It's $7. So that's $50. $50 from here. So 220 if we were to have every single week up and we carried the ATR for the week, we could see 120. I don't think that's going to happen, but probably something closer to the 200. Buying the 200, sell the 195. Yep. That results in a credit for 5 of these. A credit of $470.
Every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network. Download the Schwab Network app and join in on the latest market trends. Available anytime, anywhere, on any device for free. Schwab Network.
190. All right, 190 and 195.
Green, senior market correspondent here on Schwab Network. Kevin, earnings season continues to roll on next week. NXP Semiconductors will report on Monday. Just taking a look, shares up about 1.6% today, so there's some optimism. What's the street expecting in terms of what it should report in terms of top and bottom line?
Yeah, we are actually expecting a little bit of volatility. The implied move right now is sitting at 4.6%, but the street is also expecting revenue to come in at $3.39 billion. And then also the adjusted earnings per share right now is estimated at $3.58. I think the biggest thing to really focus on here is going to be the automotive segment. We have seen a little bit of slowing when it comes to automotives as far as demand because of rising interest rates as well as the amount of supply that's hitting the market. And we've actually seen some other companies that have that.
All right, just looking through this iron condor, see what the different variables.
The market is actually expecting around 4.9% growth on a year-over-year basis, and we are also going to be looking at the industrial and IoT segment.
Okay, that's something I'm going to go ahead and save. I'm going to get a little bit closer to 180. Look for price to stay in between, say 204 and 158. Okay, what's Disney doing? Disney is at the top of the range.
Yeah, from a technical standpoint, it is poised to break out here to the upside. The street is actually expecting revenues to come in at $9.47 billion.
All right, what's Disney going to do? What's Disney? Disney. Disney. All right. It's above the 10 EMA. Can it get back above 92 in the next couple of months? Maybe. I don't see any news, so Disney's just moving back to the top of the range.
Mm. 7% year-over-year growth. They have been able to once again manage their expenses as well as really focus on their efforts to expand their market share within this space, and that's been being reflected when you look at lifts in their earnings. They see the impact of the aggressive nature and competitiveness of this marketplace. So I think the market is really positive when it comes to Uber moving forward here. Let's see if the results are going to reconfirm that. That's going to be on Tuesday morning, by the way.
All right, yeah, much different story for Lyft. Although Lyft up 5% today and up about 12% this week, but overall, much different year for Lyft. Kevin Green, senior markets correspondent, thanks so much. All right, it's time to spotlight big tech and what we've learned from third quarter earnings season so far. For that, we welcome in Daniel Newman, CEO of the Futurum Group. He joins me here at the desk. Daniel, so good to see you. Thanks so much for joining us.
Thanks for having me.
All right, so of course, there's a few key names that have really dominated the spotlight, Apple being one of them this week, but you have a list of quiet tech earnings winners that you brought with you. Tell us who came out on top there.
Microsoft was the best this quarter. I just want to say that up front. But I'll spotlight three. So the first one was Qualcomm. Qualcomm, a company that's largely known for handset, mobile device manufacturing, had been a really tough year for handsets, for PCs. The company beat, it raised, and it was finally able to talk about positive.
Hope everyone's having a good day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Friday the 3rd of November, 11:36 a.m. It's a nice, beautiful day outside to play some golf. If you're into golf or outdoor sports, very nice. It's 56 degrees and sunny. In Myrtle Beach, expecting it to get up to about 67, 68. And the low today, just above freezing, 37 degrees. All right, it's 3:37 in London. And 8:37 in on the West Coast. I hope everyone's waking up and enjoying the day out there in the West Coast. Cupertino. We're coming into the lunch hour here on the East Coast, the Best Coast. So the last couple of days have been very, very strong. I was just talking about, I was thinking about, maybe we fade here from the highs. I'll take some puts, and decided against it because momentum has shifted. All right, so here we were bouncing at one point on the 10-year yield. Now we're below the 50-day. 10-year is now dropping below the 50-day.
What other company are we going to turn to? Intel is the only one, so we want to see a strong Intel, despite how the market sometimes likes to be a little tougher on them than other silicon names.
Since last time we were below was May.
Well, the company is in that kind of handset
First time since May.
along with PC makers. It doesn't get as powerful as, say, the NVIDIAs or the AMDs. And I think that really is largely because of the China dependence. I think people are concerned about the China dependence. And if you
Roku.
look into that category of devices, it tends to be very negative on that PE ratio going forward. I think the company's diversification, it's got a $30 billion automotive pipeline. And we all know how many chips are going to go into the smart cars of the future, Caroline. And as that ends up becoming reality, it's only just starting to turn to revenue. So I look at trends like that as the key trends for people to say, okay, we see a stronger, more valuable future earnings, and we can put that value behind the company and behind the investment. So it's going to take a little while, but they're doing a lot of the right things in AI and
All right, Roku's up another $5. Who was that? That was A-Run. How you doing? How you doing? A-Run, how you doing? Roku's up another 8%, $6.50. Nice job.
they're naturally in the conversation of every company's generative and AI strategy. Now, I think it's going to be fierce competition at the cloud level. AWS is the biggest. Microsoft has the most diverse portfolio, and Google is well known for its AI innovation. Having said that, they're all going to end up inside of
Roku, very nice.
It's not fighting winner takes all. It's going to be fighting for the most innovative products, the most diversified portfolio, and then being able to get the largest share of wallet across the enterprise. But Microsoft it nailed its monetization.
DocuSign. Very nice trade on DocuSign. Thanks.
$30 ahead for Copilot. Most companies are struggling to give a clear metric. They won because they gave a clear metric.
Another name in the AI space.
Excuse me. Excuse me for clearing my throat and your ear.
Operationally, the company's nailing it. They've done a very good job with Watson X, focused on enterprise. So the valuation is very enterprise-centric. The company doesn't always pop up in some of those more hyper-growth names. They're talking mid-single digit. But when it comes to execution of its hybrid cloud AI strategy, delivering to customers, I believe they announced a multi-$100 million Watson X business impact, but across a multi-billion-dollar business, people want to see that number grow faster. I like what they're doing. And by the way, Caroline, they're offering an indemnification to enterprise customers that are going to use their Watson X generative technology, which others are doing. But I think it's really important because if companies are going to invest, and try to move forward with generative AI, they need to know that some of the
IWM.
code and the outputs that are created, that they're not alone. That if it creates something that's copyright violation, if they get code that's not there somehow. And I think IBM's
IWM.
they were sturdier during the downturn of 21, 22. They actually saw some of the best performance. But now that you're seeing that more exuberance towards growth,
IBM's always going to be more about stability, more about the dividend, and more about long-term shareholder value.
All right, we have to wrap, but I do want to ask you, because I know you've been meeting with so many of these tech executives one-on-one. What's the biggest hurdle or the biggest challenge that they're most concerned about looking ahead?
Yeah, I think they're trying to find a way to tell an AI story and meet the market where it wants to hear about how that turns to dollars. I mean, we all know we can be more productive, we can get more efficiency, ChatGPT can write a blog for us, but the street wants to know, is a company going to incrementally pay? Is this protection? Are you just using AI to keep a customer? They want to bet. The investors that we're seeing, they want to bet on companies that clearly tell an AI story that said, we're going to grow revenue, we're going to grow margin, and we're going to be stickier for our customers.
All right, we have to leave it there. Daniel, always a pleasure. Thanks so much for breaking all of that down for us. Really appreciate it. All right. Coming up next, it's time for the disruptor. Skyworks just got downgraded after earnings. George Phillips is here to break down the stock and make an example trade. As we head to break, let's take a look at some of today's winners and losers in the S&P 500.
My dad was a hard worker. He used to do side jobs, installing windows, charging something like $100 a window when other guys were charging $400 to $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me.
All right, what are you talking? What are we talking here? 195. I'm gonna post something here shortly. I'm just. Okay, there we go.
Spotlight, the biggest market on trading. 11 a.m. Eastern, only on Schwab Network. Start your morning with analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
I'm glad I did that. Let me just check the deltas. Oh, the deltas are like extremely unlikely that we get to where.
No place better than the Schwab Network.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Extremely unlikely we get there. Okay.
Welcome back to Trading 360. It's time for the disruptor. George Phillips, senior markets correspondent, is here with today's company, which is Skyworks, ticker symbol SWKS. So, George, Summit Insights just downgraded Skyworks after earnings. Doesn't seem to be having much of an impact on shares. They're up about 1% today. What was your biggest takeaway from the quarterly numbers?
Yeah, I mean, if you look at the stock, it's actually recovered pretty much all the losses from the after hours yesterday when they reported earnings. And of course, they're moving higher in sympathy with the market today. But overall, Skyworks, when you look at the report, they actually demonstrated some slowness when it comes down to, of course, handsets. Skyworks is a major supplier of radio frequency filters and connectivity solutions. They actually sell both digital and analog chipsets that are considered what are called system-on-a-chip technologies. In other words, they're programmable after they've been manufactured. Now, if you look at some of the competitors in the industry space for system-on-the-chip technologies, you have to think about companies like Lattice Semiconductor and ON Semiconductor. I'm just pointing out a couple of these names that have been drastically to the downside, particularly after they posted earnings, whereas Skyworks when they actually reported earnings yesterday, they did beat both the earnings and sales estimates. $2.20 for earnings, but that was down 27% year over year compared to $3.02 reported for the same quarter last year. While sales did come in slightly higher than estimates at $1.22 billion, sales number was actually down by 13%. Now, prior to yesterday's report, the estimates for the four quarters in terms of sales growth was about 1% to the downside. So they're already guiding for a contraction going into 2024. But for next quarter, I think one of the reasons why the stock sold off in the after hours and is having a hard time today, irrespective of the market move, is that the guidance for sales for the next quarter at the midpoint was revised down by the company from $1.29 billion to $1.19 billion. So it's a marginal decrease in sales guidance for the quarter upcoming. And I think this is one of the reasons why many analysts, including if you look at Susquehanna, they do maintain a positive rating on the stock, but reduced their target to 110 from 115. But also at the same time, KeyBank does maintain an overweight rating on the stock, but they did conservatively reduce their target to 120 from 130. And I think if you look at Skyworks, one of the things that you have to keep in mind is it doesn't necessarily have a lot of the industrial or automotive exposure as a percent of revenues like some of the other majors that I talked about, like On Semiconductor, because that stock has been really bad in terms of performance, especially.
All right, we're going into lunch hour.
Reported earnings. And lastly, I'll say this: if you look at Skyworks, they do have quite a bit of exposure to Apple in terms of their handsets, but they also have a broadening out exposure to revenue base with Android smartphones, including, of course, Android's or Google's Pixel phone and Motorola, which again uses Skyworks technologies implemented in their handsets.
Okay, so all of that considered, you mentioned a few of the more positive analyst ratings. I was just doing the math on my trusty iPhone calculator. 54% of analysts at this point are in the hold camp. So what's your example trade for a company like Skyworks that hasn't, taken part in this year's rally at all? It's still down almost 1% year to date. How would you trade this one?
Yeah, so I mean, you bring up a good point. If you just look at the chart, you have to go back to late last December, where we actually hit a support area of $85. And in fact, we hit that again today as the stock opened up. So we're going to use that as an area of support. And considering the guidance downgrade that the company provided, some of the analysts are reducing their targets, but we're basically trading post earnings. So there's a little bit more visibility and stability in the price. So with that said, we could actually look at that $85 level and sell some cash secure puts at that level. Going up to December, you could actually sell the 85s for about $2 a share or $200 a contract. So effectively, we're getting us to place this trade, or a trader could see about a $7 decline between here and, of course, the current price before you're at risk of the break even, which is $83. So that $2 of premium is about a 2.8% yield to strike price between now and expiration of 42 days. But you do have flexibility because between the current price and the break-even price of $83, you have basically about a 9% give back of a potential just in case it does pull back in the coming weeks.
All right. Thanks so much for that trade and the breakdown of Skyworks. You're still Have a great weekend.
All right, nice follow through.
60 rounder panel is taking a closer look at Apple earnings. What's next for the tech giant headed into the holiday season? That and more after this quick break.
All right, nice rally. Good thing we didn't take any puts, right? You remember the reason behind not taking puts? Because the momentum is clearly bullish. So any dips most likely is just a short covering.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device or screen. Schwab Network. Miss out on today's market headlines? Get caught up and text direct at swapnetwork.com. Available anytime, anywhere, on any device for free.
Welcome back to Trading 360. It's time for the 360 round where we're talking Apple earnings. They, of course, came out yesterday. For more, let's bring in our panel. Brian Colello is Director of Technology Equity Research at Morningstar, and Brian Mulberry is Client Portfolio Manager at We have two Brians here. So, Brian Colello, let's start with you. What was your biggest takeaway from yesterday's report? Just taking a look, Apple shares actually not participating in today's rally. They're down about 1.4.
Okay, Apple, look for an end-of-day run if they're going to get anything here. Killing Theta. Okay, we're breaking higher. S&P breaking out. Wow. That's pretty impressive. 4,300, 4,350. Mm-hmm.
But we would agree with Brian in that looking at the long-term structures of how we're going to generate future revenue, margins are improving, and we're looking at really solid growth on the services side, 16% growth year over year. And you talk about 1 billion users in the App Store. They're really getting prepared for what the next wave of AI generation apps look like, increasing value there. And so I know the story with Apple's usually about the iPhone adoption, sales, and all that kind of stuff, but there's really more of a broadening in terms of where they're sourcing revenues and where that looks like it's going to come from in the future. So with stronger margins, they also have $162 billion sitting in cash. That's roughly the same market cap as Nike and the whole company. So if they do need to make a change in this higher interest rate environment, Apple can finance a lot of that by themselves. That just, again, makes that gross margin picture that much stronger for the company. And we see better growth past the next probably 2 to 3 quarters.
All right, I'd be taking some profits off nonetheless.
Okay, Brian Colello, services certainly the highlight, but I want to talk about devices. This, of course, includes at least the initial rollout of the new iPhone 15. What can we glean about the strength or maybe not of that phone, especially as we head into the key holiday shopping season?
Yeah, and we always tell investors that this is peak Apple season, that this is the time to pay attention to this quarter in particular and the guidance for the holiday season. Again, guiding to sort of flattish revenue on the iPhone side with some puts and takes, whether you're talking about commodities or a 14-week versus a 13-week quarter or the timing or anything like that. I think it's in line pretty much with what the market was relatively expecting. Again, a little light on revenue in total, but nothing crazy. I don't think anybody was expecting a super cycle year out of the iPhone 15 series, but in light of higher interest rates and everything else, we're glad to see that it wasn't a devastating cycle or a sharp downturn.
Yeah, I don't know if we're going to make it much higher than this. Nice work, though.
Some significant challenges, but we probably see Apple, as they have been able to do over the last year, probably manage through about flat to the same 3% growth that you saw in iPhone sales total. So there's no question it's a very competitive marketplace. Huawei is definitely wanting to make inroads on that adoption rate for the Chinese population. But we think that Apple has always been really good at
positioning themselves just in terms of an ease of use on their particular hardware devices. They've always been good at interacting with consumers. It's one of the reasons their reputation is so strong in this particular space, and even in China, that we think that will probably carry through. It doesn't mean super strong beats or really high expectations. It just means that they're able to maintain their competitive edge even in the face of strong competition from Huawei.
All right, Brian Coelho, just as we wrap things up, we only have a minute left. I was taking a look. The fair value estimate for Apple is 150. Apple's currently trading at 175, so not a buyer at these levels. Would you prefer to buy instead?
I heard the prior guest on talking about Skyworks, and I'm probably in that camp of having that one as a buy. I have a 133 fair value there, particularly relative to iPhone. We don't think Skyworks is doing fine.
Yeah, we're definitely overbought in this zone, but institutions continue to buy 6-to-1 sustained volume. It was 13-to-1 earlier. So until this volume really starts to drop off dramatically, we could see more short covering and bears getting run over.
Seem to be rolling over that bad, and we like the secular trend of more chips per car, and that's still going to keep growing. There's probably an inventory correction on the way, but longer term, we think there's great growth there. So we'd be looking at names like ST Micro, NXP, Infineon.
All right, we have to leave it there. Brian Coelho, Morningstar, appreciate those picks and insights, and Brian Mulberry of Zacks Investment Management, appreciate your insights as well. That's going to do it for Trading 360. I'm Caroline Wood.
All right. So we're overbought, but we continue to extend to the upside. So, you can keep moving your stops up right underneath current levels, current flags. Does look good, though. Markets do look good.
Unlimited ATM fee rebates for cash withdrawals worldwide. No overdraft fees. And enhanced security features to protect your money. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network.
Daily live exclusive content tailored for today's investors.
Broadcasting 24/7 from our studios in Chicago
and from the heart of Wall Street, the New York Stock Exchange.
Up-to-the-minute market insights,
example trades, and stock-specific analysis featuring the smartest minds in the business.
No politics,
no noise.
Analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
and on demand.
24/7, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere.
On any device for free.
Schwab Network, empowering every investor and trader
every Monday day.
All right. Nice follow through. All right, I'm just going through positions right now, see if there's anything I want to take off, even at a small loss. Reduce my exposure, focus a little bit more. See what looks good. Tap looks good.
Favorite streaming services. Schwab Network available anytime, anywhere, on any device for free. Schwab Network.
afternoon, traders, and welcome to Fast Market here on the Schwab Network. I'm Tom White, and we've got a great lineup for you today, including discussions and strategies in Tesla, which is up nearly 80% so far this year, after trading below $200 earlier this week. And Lowe's, which has rebounded about 6% so far.
All right, what's Tesla doing? Wow, Tesla. That was a nice run up this morning. Giving it back. Nvidia. Microsoft. Nvidia. Nvidia, nice follow through.
Fed's attempt to cool the economy and stifle inflation could be working. Now let's take a look at the four major indices, which are just off the session highs here as we speak. Strong gains for the overall market throughout the week. S&P 500 up 1%. Dow Jones Industrial Average up over 250 points, or 0.75%. NASDAQ 100 up 1%, and the Russell 2000 after a 2.7% gain yesterday, adding another 2.85% gain today. The index is up 7.7% on the week. To help me break down the market action, let's bring in my co-host Kevin Hinks. Kevin, what was your take?
S&P feels overbought short term.
We've talked repeatedly about that. They want a weaker jobs market here, and they're getting some data that kind of supports it, right?
You know, this is more time of, think about it. As you work through the columns of this payrolls number, there's nothing in there going line by line by line by line that would scare Jerome Powell. Nothing. Jobs, 150,000, and with a revision down last month. That's a safe number. 3.9% unemployment.
Nike.
4%. That's Jerome Powell's.
Little profit taking at the highs. Chewy. Nice follow through. Let me see Chewy. I might decide something here on Chewy. Okay, volume below average. I'm going to go ahead and take this off for now. Chewy, I'm all out. Nice profit though. Chewy. I made a buck. All right, so Chewy, I'm out +1 on the on the calls. I had the 12, 15, 20 call.
We'll talk about that in a minute after our top story, but the moves are just unbelievable. If you've been watching the markets like you and I have for the years that we have, these are some outsized moves that you typically don't see in the overall market, lending a bunch of support here to equities and risk-on trading. But the big news story today, as far as the corporate side, is Apple earnings. Let's bring in Kevin Green, senior markets correspondent here on the network. Kevin, I'm telling you what, if this market was not as bullish as it is today and this week, I would think that Apple might be trading around 165 right now, because this wasn't a great report by any stretch of the imagination.
Yeah, definitely. Usually Apple saves the market. It's kind of the other way around.
Okay, Apple looking for buyers to come in. Higher lows, looking for a higher high. A push through 176 would do it potentially. Take out above 176. Apple gets above 176.
Expectations coming in at $1.46 versus the estimate of $1.39 here. We actually did see some weakness when it came to China. They did miss the expectations by around $2 billion. But We are also seeing some growth within the services business. It's a smaller portion of its overall revenue, but it is one of the faster growing segments of its business. It did beat the estimate by about 4%, and it is growing at 16% on a year-over-year basis. The last time we saw that type of growth rate for services was back in December of 2021. Max sales continue to disappoint the street's expectations.
Okay, S&P, NVIDIA looking good. S&P. Okay, I don't think we can get much higher, but shit, anything's possible. Looking good.
Now the market's continuing to bid up this stock, even if we are seeing those revenue declines. I believe this was the third or fourth quarter that we've had revenue decline on a year-over-year basis, but the market continues to bid it up. So you are right. I think that the broader market is really lifting up Apple at this point. Let's see if it's going to be able to remain that well throughout the rest of this session, at least.
Kev, there's a little detail on the fourth quarter sales. I noticed, as you did, that they're projecting fourth quarter sales flat. And that surprised me going into a holiday season. But Kev, last year, 14 weeks in the fourth quarter. This year, 13 weeks in the third quarter, in the fourth quarter. If you add that on, they said that's as much as 7%. So is that flat reading for fourth quarter revenue a misread based on one less week? And the other thing, with all the weakness we're talking about, this stock's up 34% this year. So still pretty solid free cash flow, chugging along here on the numbers. But boy, this is still a company up 34% with some weakness in its numbers, Kev.
Yeah, I would think the CFO will
All right, I just took DocuSign off, taking some DocuSign off. DocuSign with a nice profit.
On this name, I don't believe that the China sales were just the impact of just consumer weakness within China. I think there's something brewing there because of this soft China ban. That's just my own judgment based on what we've seen not only from Apple, but from some of these other players, these international players out there. So I think that's going to be the biggest area of concern. And they're going to have to bring out a product that's going to be, that shocks the market, that provides growth right now.
Shock the monkey.
And the fact that they have this backlog for the 15.
Shock the monkey. Remember that song, Shock the Monkey? Shock the monkey. Yeah.
In China, and I think that's an area of concern that probably would have brought this stock down a little bit more if we did not have this rally in the broader market.
You know what? I look at it this way. Apple's lucky that it's Apple at this point, because any other company out there with this type of valuation, getting 4 straight quarters of declining revenues, I don't think the market would be too friendly to the rest of them. But it's Apple, as we all know. All right, thanks to Kevin Green, senior markets correspondent here on the network, breaking down the Apple earnings. But now let's bring in Joe Mazzola, Director of Trader Education at Charles Schwab. Joe, I kind of wanted to get your take here. Kevin kind of went over the data points as far as the weak jobs number, which is supportive for equities. But this rally that we've seen so far this week is pretty spectacular. Biggest rally that we've seen in 2023 for equities.
All right. Nice.
Look at the sectors that are doing the best. It's really the cyclical sectors this week. Real estate.
Banks looking okay. Banks.
Industrial 6 and financial 6. So big moves in some of the underperformers. And it really is an interest rate story, guys. I mean, that's what it comes down to. You get a pullback in the 10-year from 4.9 down to 4.5 and change. And that gives a little bit of that, keg in the powder, or powder in the keg, I guess, excuse me, to
kind of a slow day after this morning's run-up. Our Paramount, what's that doing? Paramount gapping up. Trying to change trend, Paramount. Last earnings, Paramount was above 16 and change, and it just faded. Marcus didn't like what management had to say. S&P still pushing. S&P. LOPE, Grand Canyon Education, LOPE. Wow, big move. Up 13%.
This week, sorry, that's typically maybe a yearly kind of move, but 30 basis point fall in yields, that dollar getting creamed over the last few sessions. Also, I mean, this is a risk on mode at this point, and it's hard to stop that momentum, right?
You know, again, when these numbers came out, not from payrolls, they just weren't very scary, and all the numbers that came within a certain range are not very, exciting numbers. How do I know? Look at the VIX, Tom. You're right. 10-year yield. I see a high on a 5-year chart of 4.9. Now it's trading 4.5.
All right, we're still pushing. The markets are like not giving the bears a chance to take a breath.
That's good for metals. You see gold and copper getting a lift off that, as well as multinationals and grains and all these commodities. So the dollar is really good for stocks. But the VIX is telling you that equities, some of the risk off, some of the tension that was around equities is dissipating, guys. And that move in VIX this week, that's been a big one as well. So listen, I think when you go through the data,
What is Dell doing? I haven't looked at Dell in a while. Dell in a big range. MACD cross. Stochastics rising.
You have the Fed announcement, Jerome Powell. You got all these data points big that were this week. We came through them with flying colors. So not surprising that the market feels a lot better about itself than it did the day.
Yeah, Joe, it's not surprising that we're seeing, worse data actually be supportive for equities at this point. But when I see yields fall that much,
Carvana. Wow, Carvana just kicking butt. Carvana is kicking buttocks. All right, let me go take a look at Carvana on. Today's a slow day. Today, Fridays, I generally take profits early in the morning, and then I start looking at fundamentals, stocks like Carvana. Let me see what's going on here. Carvana. Okay. It beat expectations. Revenue fell 18%. Company beat expectations by 132%. Earnings growth 108%. Earnings surprise 132%. Okay. Consensus estimate was a loss of 85 cents per share. They reported earnings of 23 cents. So they reported earnings. Carvana reported earnings 23 cents per share, when the consensus estimate was a loss of 85 cents. So that's a dollar difference from 85 cents to 23 cents in profit. Just shy of a dollar. What, 97 cents? That's a pretty decent beat. Okay, that's pretty interesting. Let me look at fast graphs. Fast graphs gives you a nice fundamental analysis. Let me take a look at that. Fast. Palantir and Upstart. Palantir, nice break of a range. Upstart. Mondo mentioned Upstart. Upstart turning the corner. Could get a run going here. Upstart, maybe some cheap out of the money calls that you don't mind, losing a few dollars on. Let's see, what's January? December, end of the year on Upstart.
The U.S. consumer at your own peril, Tom, because they keep showing up. They're like Lou Gehrig and Cal Ripken. They can't. The U.S. consumer, they keep showing up.
President Larkin was out earlier today, so
Upstart, some cheap out of the money December calls. The 36 call, it's 20% out of the money. It has a 41 delta. 275 bid, 292 offer. I just got some at 286, midpoint 286. A little bit of slippage there, about 30 cents. Put in a limit order, you might be able to get filled, but this is pushing higher. Upstart looks good.
Young lady who was mid-30s, couple of kids, recently went through a divorce. She had a lot of questions. She came to me. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was hers, we were able to help her move forward. The client won't care how much you know until they know how much you care.
Nice work, Frano.
It's time to look forward.
find the next
There's no fear of missing out on Next Gen Investment. Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffin. I'm Jenny Horn.
All right, now I wanted to look at Carvana, fast graphs. Carvana, see what they have to say. Okay, it's in line. Oh, that's Qualcomm. Shoot. What's Qualcomm doing? Qualcomm after earnings. All right, trying to follow through. Nice volume on Qualcomm for the past 6 trading days. Qualcomm, check it out. QCOM, Qualcomm, making chips. The other day, they made a mention about their chips being faster than Intel and Apple's chips. So that's pretty cool. Carvana.
Welcome back to Fast Smart here on the Schwab Network. We're talking Tesla. Shares are up nearly 80% so far this year in 2023. Bounced pretty significantly this week. Off a multi-month low. It's kind of when you look at this company, margins still just below 18%, better than your competitors at this point.
Intel still grinding. Intel, nice grind.
From a month earlier as far as sales, but they seem to be the only one that's making money selling EVs.
Yeah, there's a lot going on in Tesla, and I noticed what you noticed, Tom. It hit $200 or slightly below and really bounced off that number. And I think some of that had to do with the solemn tone of Elon Musk's conference call after their earnings. He was very concerned about interest rates, very concerned about higher interest rates making EVs or cars in general less affordable.
So he was very
AMC, nice breakout.
conference call, and I think that weighed on the stock. Now, it's bounced since then, and he does have some good news. He's getting, I guess, that first thing, a little macro help from interest rates have come down. The Model 3, the revamped Model 3 that they're going to sell at a higher price may spur some good news out of China. The China numbers weren't as bad as expected in terms of some of their demand. So that's still a good area of the world where he's hoping to do well in. But you're right, Tom. This stock went right to $200 in bounce. Now trading 220.
Yeah, Joe, they're still focused on production of 1.8 million vehicles for 2023. They usually or typically ramp up in that final quarter of the year. But I think a lot of the catalysts had to do with Ron Barron, the notable Tesla bull, coming out and saying, hey, this company can be worth $4 trillion. I know he's selling his own book there, Joe, but at the same time, he's been pretty right so far.
I mean, look, Kevin hit the nail on the head. They're profitable. Their competitors are not showing EVs. They've created a production cycle that allows them to make money where everybody else is losing.
S&P is still hanging in there. I hope you're having a good day today. Yesterday was a nice follow through. Push higher today, nice follow through.
Even though it trades at a pretty high valuation relative to its competitors, the bottom line is it's kind of earned that to a certain extent because of its production capabilities and because of what it's own supply chain.
Apple turning. All right, so we're starting to see Apple more shorts covering. Okay, so stops above this area most likely. Apple turning. Keep an eye on your Apple. Okay.
Yeah, it's always traded at a premium. And I think Joe got a little dig there in on us, Kevin. He thinks that people on the West Coast are cooler than us. They got all the new toys before that we get them here in the Midwest. But be that as it may, Joe.
Apple.
We need to bring Joe out to the western suburbs of Chicago.
Looking for a follow through. Oh, it's 12:25. I've been listening to these knuckleheads. When I can listen to another knucklehead, Wapner. Is Wapner in there today? Joe Terranova's on.
To be a lot lower than where it is right now. This is sales execution, which is evidence that it's idiosyncratic.
All right, Apple.
Their firewall products are where they're seeing significant challenges. There's nothing I can do about this until the end of January. Not every stock in your position is going to work. And this is a stock that
you just rebalanced. You're already having, rebalancer's remorse.
No, it is what it is. No, not at all. Not every stock is going to be perfect in a portfolio. This is a stock.
Really? The way Wapner comes across a lot of times, you buy a position, it doesn't work out. Out of 20 positions, he focuses on one. I know he's doing the protagonist thing, but give me a break.
Cybersecurity itself. This seems to be a referendum on this stock. This, by the way, specific to Fortinet. Cantor Fitzgerald, target cut to 50 from 75. That's a big cut. Okay. Downgraded at JP Morgan to 52 from 67. Target cut at Stifel to 52 from 69. Evercore ISI to 51 from 70.
And analysts are always right when they downgrade. Come on, give me a break, Wapner.
Absolutely should. And it'll be dealt with at the end of January. I'm happy today say that it's equally weighted, but look at where we are today. We're doing just fine. Gartner, I see Citizen Plus.
Apple's starting to go.
Palo Alto, Jenny. How about it? Is this as idiosyncratic as it suggests?
Okay, maybe some next week's calls on Apple. What time is it? It's a Friday. I'm into reducing exposure, not increasing. Does look good though, right? Oh boy. Oh, I got next week's calls. Holy crap. Apple. I didn't even realize. I got to pay more attention.
Steve Belsky, what do you think?
We own Palo Alto, great management team.
Huh.
Great. But do not underestimate.
Well, you think the management team's probably great at every company you
No,
own.
I don't.
What do you mean?
Actually, don't, because I sold some stocks because we
Hmm.
we sold some stocks because we got it wrong recently. But don't underestimate how important some of the redistribution back into bricks and mortar aerospace and defense has been the last 6 weeks too, because of what's going on around the world. So that might have had something to do with it as well.
All right. Headlines now. Down 2. What do you have for us?
All right, so Judge, President Biden and First Lady are traveling to Lewiston, Maine this afternoon after last week's mass shooting. They are going to pay respects to the victims and meet with the families and the community there as well. President Biden has been calling on Congress to pass an assault weapons ban, increase red flag laws, and institute universal background checks. An appeals court has rejected.
Haven't they been doing that all along? It's just really crazy. And you got to feel bad. Can you imagine your kid goes to, I'm not going to dwell on it. Can you imagine your kid goes to the bowling alley and some knucklehead like this shows up? S&P continues to move higher.
And the Star CEO announced today that the network and streaming service will lay off more than 10%.
Take care, Novissimo.
And is leaving the Australia and UK markets.
Look at this market. Look at this market. Crushing it.
Stars is also planning to separate itself from Lionsgate in the first quarter. The two have been one company since Lionsgate acquired Stars back in 2016. Scott, those are your headlines. I'll send things back over to you.
All right, Dom, I appreciate that. Thank you, Dom. 2 coming up. The travel stock is soaring on earnings today. One firm calls it the best bargain in the space. Joe recently bought it.
There goes Apple. There goes Apple. $11.17. Apple on the move. All right, NVIDIA's still going. Nice, NVIDIA. Good job. We're going to be at 450. NVIDIA going to hit 450. Oh, boy.
ABC.
Big day shaping up. You just see we're green across the board. I have a trade alert.
Wow. Beautiful.
He just added to some positions, so we wanted him to call in and tell us about it. So you said you were going where you thought you were going to add to AMD, which you did, and you added to NVIDIA as well. Talk to us.
I did, and I'm sticking with the game plan. Again, this has been in motion since July. Looking for the seasonality of the sell-off to take through, looking for these earnings to come out, to get some confirmation. Obviously, NVIDIA's earnings
NVIDIA.
to come, but
Oh my gosh, look at NVIDIA. Wow. Wow.
Sometimes I find myself trying to fit the bill to a narrative that I'm looking for the next NVIDIA, when really NVIDIA is staring me right down the line here. And I increased AMD after this earnings report, let it settle in, bringing up to a number 7 position.
Oops.
But I didn't want to leave NVIDIA behind, so I increased the stock there and bringing that. So they're leg and leg as their number 7 position. I mean, the AI space, I think we've seen a lot of gas come out of the balloon a bit, and I think from here we're seeing it really settle in very nicely. NVIDIA holding great technical support, and then look at what we're seeing in yields today. I mean, what the 2-year yield has done, coming down and breaking a multi-month low. I think it's going to be a tailwind to tech, and we're right back on track for this Christmas rally, and I want to own the best stocks out there.
Yeah, I appreciate you calling in and giving us an update there. AMD 1 week, up 15.5%. Joe, I'll just go to you before we move on to some of our earnings things, because AMD, if I recall, was one that was moved out of the Joe T.
It was.
Good timing.
Yeah. No.
I'm just kidding. No, I'm kidding. I'm kidding.
The rules said move out of it, and that's what we do.
I mean, still good timing, whether the rules are the rules. Maybe we need to rethink the rules.
Nope. Very happy with where we are today.
All right. Earnings. Let's talk earnings. Expedia. It's you too. You have that in the T. Up big. Up big, right?
Oh, it's up big, yeah. Maybe I should come
It's
back.
not Gartner, but
Maybe I should say, well, we sold AMD so we could buy Expedia. And I'm not going to do that. The expectations going into this earnings report for Expedia were very low. To the benefit of Expedia shareholders, what's important here is the geographic exposure. So they don't have the geographic exposure that Booking Holdings does to the Middle East. Booking Holdings has 89% international exposure. Expedia is more domestically oriented. In addition to that, the margins were very strong here. And then the buyback, the $5 billion buyback, it's very aggressive. And there's an indication here that there's more to come on the buyback. So this is a great example of being able to take advantage of low expectations in earnings, right? And coming in and exceeding that bar. Complete opposite of Booking Holdings, because in Booking Holdings,
which you have too,
in the Booking Holdings, the expectations were actually high for them. So Expedia benefited, I think, from in August talking and lowering guidance significantly. It's one of the reasons why you're seeing the big pop right now, up 18%.
Yes, nice, very nice. Yeah, glad you mentioned it twice. Skyworks, what's your comment there?
Not much on Skyworks. I really don't have. You have Skyworks. It's in the portfolio. It's up 1.5% on a day where the market's rallying strongly. Candidly, a little bit disappointed by that type of reaction.
You want to give me Skyworks?
Yeah, so it's interesting. We added it earlier this year, and what they do is they make semi chips that are used in communication, so Wi-Fi, wireless, network, satellite, radio, all of that. It's really a niche area. And when we bought it, we thought, oh, demand has bottomed. Actually, we were early on that. And what we hear on the earnings call today is you've got a company that's got trading at 11 times depressed earnings, generated $1.6 billion in free cash flow, has a 12% free cash flow yield. So to me, this is really where you want to be. Oh, by the way, they have no debt. It's a debt-free company.
Don't you think the reaction should have been stronger today? The stock's been
because guidance was weak, and what they're saying is that whole bottoming of demand isn't here, and it's a little further. So that
Isn't this an Apple supplier?
Yeah.
So how can Skyworks rip if Apple's not ripping?
Well, because it's been down so significantly. If you look at that chart, this stock has been punished. So any form of a hint that this is
not as bad as expected. I would have thought the stock would have been up a
I
little
don't
bit
know.
more,
I just
especially on a day when the market's so strong.
I think, okay, but let's think about the fact that there's no debt, right? Who's been really punished in the last few weeks? It's the high debt companies. So this being punished is not because of high debt and now, like, what's juicing all these little ones today? Interest rates coming down, all the companies with leverage are up a lot. They're not in that. They're just kind of in a realistic place, which is demand is going to take a little while to work its way out. And it's not just Apple, it's automotive, it's industrial. They have a huge client base. They're going to be in like 75 billion devices. But it's kind of a commodity. It's a slow and steady. So I'm comfortable with this response.
I mean, the smartphone market has been that's the reason why the stock hasn't been anything.
Right.
Bottom line. But the outlook's not getting any better.
I would say.
Well, I mean, it's getting a little bit better. I mean, you know, it's not like, well, actually, Skyworks told you the outlook's not going to get better.
But you can say, all right, what multiple does this deserve to trade at in the long run? And I would say with a 12% free cash flow yield, it should probably trade at, I don't know, 13, 14 times earnings. You know, if we get there, we've got 25 to 30% upside. That's not so bad. If that takes me a year in this environment and I'm in something that has less volatility, that's relatively stable, a lot of clarity, I'm good with that.
Okay, Joey, what about EOG? Let's take a look at that stock.
It's interesting because, first of all, oil's down today. And as I said the other day, I really believe for these energy equities, this is a prove-it quarter. This is the quarter they have to make their move. They have not performed so far. You cannot dismiss that premise. I know everyone is overweight energy, myself included. We're all carrying positions, waiting to see that the supply to demand imbalance is going to reward us. And it hasn't so far. So EOG, very modestly higher, and oil's down today. Again, I'm somewhat disappointed by that.
All right. Coming up, our call of the day. It's a big upgrade from one of next week's earnings headliners. Shares up more than 15% this week alone. There's the chart. We'll give you the name. We'll give you the trade. We'll do it next.
All right, take some profits. We're overbought here. We are severely overbought. Can we keep going? This is crazy.
Big upgrade today ahead of earnings next week. KeyBank is the one who did it. They go to overweight, and that's from sector weight price target to 60. Jenny, you go first on this. That's a big upside from here.
That's a big upside, and frankly, it makes us nervous. So we around 45, we around 47, and the way we're looking at it is we're seeing slight demands of weakness.
Wow, ARM is at 53.
That's softening a little bit. So we think that
Wow.
is aggressive. It's still a big holding. And by the way, when we bought it a year and change ago, our estimates were free cash flow to be $2 billion in 24, $4 billion in 25, and we underestimated those. Those are coming in at 3 and 5. So I think it's solid. I think it's great, but that $60 price target and that level of enthusiasm right here makes us a little nervous, which is why we trimmed.
Joe, you nervous?
Doesn't no, not at all. Not with Uber. They've taken significant share from Lyft, and I think when you look into 2024, the improvement of the balance sheet, S&P 500. I mean,
yeah, that's a good point.
I think that's where this stock belongs, given how critically important it is in everyone's day-to-day activities, both personally and professionally. And the improvement is there. The fundamentals have been improved significantly. Delivery has benefited them. Mobility's coming back strongly. Stock is at 47. I think it goes well into the 60s.
You own it too, Brian, right?
I do. We owned it. We bought it in September after the big pullback. And per Joe's point, this is going to be an S&P 500 stock next year, and it's going to be classified as an industrial. And that's part of the reason why we bought it, because we want a little bit growthier in industrial, and we do love monopolies.
Yeah, KeyBank today says, we believe Uber has cemented itself as the category leader in mobility and has successfully leveraged its brand and consumer reach. Delivery, all this other stuff that they've got going on that, by the way, Lyft doesn't. That's one of the differentiators. Obviously, zero interest rate environment, lifts all boats. Different environment doesn't lift all boats. Uber kept going, profitability, Lyft went the other direction. Your point?
No, I was going to say, and when I say we've trimmed, we're still strongly behind it. We paid 20, I think 22 for it. That would say if we started at a 3% position, it would have been a 6% position. So the trim is just to be prudent. It's not to make a negative call.
Okay. We have more earnings next week. It's a busy calendar still. Disney is on the list. We'll trade that along with NXP Semi. Want to do that? Wait, we're doing that now. We'll do that next. We'll do it next.
All right, starting to pull back now. All right, maybe some SPY puts for next week or today. Don't think we're going to pull back that much. Just looks like profit taking. Maybe we just hang out here. So it's been a banner day. I'm not going to take any puts. Momentum is up. What I am doing is just taking more profits off the table. ARM holdings up bigly. Okay, we told you an ARM that we were looking for. Who's chasing the cats? I'm out of breath. Fruitless battle, trying to chase a cat. Much faster. Much faster. All right, here's ARM. Okay, still inside this range. Okay. ARM holdings. All right, what does a 60-minute look like? 60-minute ARM. We want to be above the 20 EMA on the 60 and the daily. Okay, that looks good. Let's look at ARM. Okay, it looks like we're trying to do something here. Let's go to Double that. ARM Holdings. I have a position. I just have 100 shares for now and some calls. I plan on buying more shares if this once this gets going. ARM Holdings. Okay.
Disney reports next week. Brian Belsky, go first. Oh, yeah. Yeah. You and every other Disney shareholder has the same reaction, though this week it's up near 8%.
We made a mistake, and the reason why we made a mistake is we took a little bit too long term of a picture. Our theme for communication services is cash content.
Actually, it's 240.
And we really believe that
120 minutes.
coming back, we bought into the management team. We do believe that he's trying to create more of a scarcity proposal and trying to cut content and trying to clean this up. I just think it's probably going to take a little bit longer, and I'm very contrarian on it. I'm going to maintain it for now, but in that sector, we like Netflix and Google and AT&T way better.
Okay, Jenny, what about you? You own Disney.
Yeah, and I think it's important to remember, as much as we're all down on it, it's only down 1.5% on the year, which I think really is a statement on the bad news being incorporated in. The stock right now is trading at basically 10 times, 15 times the entire theme park, as if nothing else there is worth anything or counts. So I think it really is too cheap. I think there is room for the share price to improve.
It is significantly down from its 52-week high, though. Let's say that.
I'm just saying, at this point, it feels like it's bottom. But Shannon's shaking her head at me because it's hard to watch your friends make mistakes repeatedly, isn't it?
The narrative here is that they, and Iger said this at their symposium, their investor symposium, they need to quiet the noise. The narrative here is all over the place, and that's why they're taking out Hulu, they're taking out that, so that's off the table. They're going to have to quiet the noise on ESPN. And frankly, the parks CapEx, that is meant to quiet
ARM Holdings, 53 and change.
Better on their narrative, so that we as investors
Nice.
make all of these assumptions, and those assumptions are not leading to good conclusions for us.
So if I take this piece of paper and I go over the chart and I cover the fact that it's Disney, which we all know the struggles, and I look at the price action since August, you know what, Jenny? You are a couple of dollars away from it actually being a technical buy.
Wow.
It looks like you've got what's known as a W bottom, and this stock gets to $89 and it's buy.
That sounds funny, him saying that to Jenny. You got a double bottom.
You pair up the fundamentals and the technicals. And
it's not exactly the most compelling case ever, but it's so bad it's good has worked before.
Hey, it's working in the market, right?
It has. So just take Josh as an example. Josh is always on the show saying he wants to buy it lower, wants to buy it lower. Okay, a lot of people want to buy this stock in the 70s. Well, maybe you don't buy it in the 70s. Next thing you know, it's in the 90s, and you say to yourself, wait a second, the train potentially is pulling out of the station. I better run quickly to get on it.
What about NXPI? That's next week, too.
Yeah, so this is all about semi.
Okay, go Apple, go Apple, go.
This is a stock that's been under pressure recently. 57% of its revenue exposure is for semi-autos. They've got some challenges ahead of them. I'm sure they're going to acknowledge on the call. The expectations are somewhat muted.
Okay, let's go through some moves. Mr. Belsky.
Yes.
Speaking of automotive, LKQ.
Yep.
You bought that? Oh, you sold it. You sold it.
Yeah, we owned it for 1 month.
That's it?
Yeah, I mean, we made a mistake, and we looked at what was going on in Europe. We thought that would turn a little bit faster, and indications are it's not.
Okay. Wow, 1 month. Harley.
Price point. We just think the consumer, what we've talked about on this show, is kind of reeling back a little bit.
So you sold this.
We sold Harley.
ARM Holdings. Okay, so that's what ARM looks like. And the daily.
We've owned this for 5 years as well. It's a great little brokerage company, but we're redeployed in financial.
Hey, if you're so bullish on the market, how come you haven't bought anything? What'd you buy?
Oh, we're going to talk about that in the my stock pick here at the end. I don't want to steal my thunder.
Oh, for your final trade? Oh, yeah. All right, we'll leave enough time for that. Jenny, you bought Ardagh Metal Packaging, AMBP.
Yeah, this isn't super aggressive. We were at a 2% position in the portfolio.
ARM Holdings.
But all they do is make aluminum cans. And if you look at the numbers, you say, hey, those are terrible. But they start to generate significant cash next year. By the way, they were spun off of Ardagh Group. And it's got an 11% dividend yield. and they're going to pay that come hell or high water. And we're starting to see stability in aluminum cans supply and demand. So between that, we thought, okay, it's stabilized. We've heard earnings. We see what the market's doing. We're willing to buy our position.
Look at this market. Look at this market. Shit. You can't short this thing. It's just too much on the bullish momentum. Wow.
Follow the Halftime Podcast now.
All right. Looking good. Looking good. No, that was Cayman. Yeah, Cayman's buying. Every time I go to short, I keep reminding myself the momentum. Momentum is clearly bullish. I don't know. I just want to keep taking some profits off the table, clear the deck. Okay, Nike. Let me take a look at Nike. Nike, nice follow through. Nice follow through on Nike. Look at all that volume on Nike weekly. Momentum. We're about to cross rate of change.
We're not doing it as your final trade. Want to spend a little more time? We're going to dig a little deeper? Yeah, we are. New buy is Stiefel. We've owned the company for a while, but we've doubled our position. The reason why we doubled our position is the company came out, terrible earnings. Financials are getting crushed. This is a brokerage firm that is a home for refugees from bigger firms that don't want to be at big banks anymore. Great CEO. Over the next year, we think 40% earnings growth, 10 times earnings. We like the brokerage business because it's scalable. And we think not enough people own brokers. We think it's a great name.
It's up near 9% in a week. Joe, what about brokers? What about financials?
If you believe that the market is going to rally, if you think there's an improved environment for risk assets, then owning exchanges, brokers, and asset managers is a second derivative trade.
Hey, weren't you talking about, I heard you, I think, in a commercial talking about Interactive?
Yes, I was. It's down today, Scott. We hold that.
Well, you shouldn't have mentioned it, because I mean, I hear everything.
Yeah, it's down 2.5% today. Great company. I'd buy the dip.
Okay, let's do final trades. Shannon, you kick us off. You want to mention one of Joe's stocks that's down?
No, I want to mention utilities, which I've had you mention a lot over the last couple months. Utilities bottomed right around October 2nd. So, and you're seeing this, change in the yield curve, certainly putting more emphasis on utilities, REITs, some of those more defensive sectors.
Yeah, going for yield.
That's
like
right.
Jenny Harrington does.
That's right.
What's your final trade?
Okay, Lamar Advertising. So they're the big billboards that you see everywhere. The stock was pummeled, announced perfectly fine earnings yesterday. Nothing spectacular. Stock was up 10%, up another 3.5% today. I think we're being reminded that perfectly fine and undervalued is the place to be.
Okay, Mr. Belsky.
United Airlines. I don't like airlines traditionally, but we've owned Delta for a long time. I think United is coming back, and we think it's going to be a bang up Christmas vacation season.
Yeah, these stocks have gotten hurt lately. Today's a totally different story. Joe?
Scott, I will see your Interactive brokers and raise you a Gardner.
All right, we'll let you go out on a high. All right, a good weekend, everybody. Thank you. The exchange starts now.
And thank you very much, Scott.
Complex trade, but it's a customized one.
It is, and it kind of goes to what you guys were talking about. Where was the bounce? Where did the bounce occur? It occurred around that $200 level. And so what this combination trade is, it involves selling the selling the December regular expiration 205 put, and then buying 35 call vertical. When I set it up, you could do it for around even money. It looks like now you can probably do it for a little bit of a credit. And this is kind of I looked at this trade a couple different ways, right? I initially just kind of looked at selling the put down at that level where we were trading. But then I said, well, wait a minute. If I'm looking at the kind of channel that Tesla's been trading in, it's kind of in the middle of that level. It got up above its 200-day moving average. It's literally right there, right around 219, 220, where it's at right now. The tape today isn't that strong, and I think that's why when I initially set up this, it looked for even money, but now you can sell the put at a higher level than what you're paying for that call spread. But I was also looking at things like implied volatility percentile, right? We're right around 10 or 11%. So if you're looking at buying a call spread is probably relatively cheap compared to where it's been in the last few months. But if you want to finance buying that call spread, selling the put in this in this trade allows you to do that and allows you to get into that call spread. Right now, like I said, somewhere between even money or even maybe a small credit, allowing you to participate in the upside if you believe, right, and that's the key, if you believe that Tesla might start trading back up to the upper bounds of that channel where it's trading right now.
Yeah, Joe, we had up on the screen the December 1st weekly series, so we're changing it to the December 15th. That's that's 42 days to expiration, but the risk profile is the same. Let's break this down. Selling one of the 205 strike puts, buying one of the 220 strike calls, selling one of the 235 strike calls. This should be December 15th. Monthly option, 42 days to expiration after December 1st.
All right, looks good.
Profile looks about the same here, Joe. If you collect your total price on this is
All right, so Nike's on the screen. You can see the markdown over here on the left. If you don't know what I'm talking about, if you're a new member, you should be able to look at a weekly chart and very quickly get an idea whether or not it makes sense to even waste your time analyzing it. If the stock price is below the 10 EMA, the red line, and the 10 EMA is dropping, price is below, you're in the markdown phase. You should know right away that this is stay away. Stay away or be short. Once the markets start to move sideways, we're thinking phase one, accumulation. Start looking for institutional volume. It takes them days and weeks, sometimes months, to buy a position or get in a position. Once the 10 EMA turns up, you had about 12 weeks of buying here, and then we stabilized and went sideways, consolidated, and then we dipped again. So long, reassess when it moves sideways, drops below the 10 EMA, longs that you took over here, you take profits and just call it a day. 10 EMA keeps dropping, you're staying out. You start to see volume pick up, price gets back above the 10 EMA. Still not out of the woods, but certainly could see another foray like October of 2022 into January 2023. We could see 3 or 4 months of upside, potentially. Volume is what I'm looking at, price is above. And then if you look at rate of change, KST indicator on your stock charts account, KST is a rate of change. So what is rate of change? Rate of change takes 4 periods. The 10 period is a short period. 30 is the long period. The two in between are benchmarks. So you got the 10 EMA turns. KST starts to accelerate in the 10 time frame towards 15. When those fast indicators start to turn, the fast period starts to turn, you'll see it in the chart. When it starts to accelerate, that's the sweet spot. All right. So we're not there yet, but we're close. Once this starts to accelerate, that's when you get long and you hold on. All right. Nike looks pretty good. No, they had good earnings recently.
This quarter for quite some time. DAX is estimating earnings of around 69 cents a share. Now that would be down roughly just 12% since August. So we're seeing a lot of revisions to the downside. This would reflect a sizable 100% recovery on a year-over-year basis. But top line expectations haven't seen much movement with around 21.7 billion expected. That would be down fractionally about 0.5% from the same period a year ago. But all in all, Disney Plus is going to be the focus, I'm sure. Disney Plus subscribers stand at around 146 million. That reflects an 11% decline from last year. So quite different from Netflix in its own right in that way, because Netflix saw subscriber growth, Disney Plus expected to lose subscribers yet again. But the company has fallen short of their subscriber estimates now for back-to-back.
All right.
So they need to see if this could be any sort
Pretty decent day today. I'm actually getting tired of this trend as just relentless, you know.
and I don't anticipate going anytime soon, to be honest with you. But when it comes to Disney Plus, it'll be in focus. It's still the biggest of the streaming platforms that Walt Disney has. However, like you said, 10% lower if it just comes to where the expectations are, which are modest sequential gains to 147.35 million. So we'll see if it can deliver on that. Doesn't seem like the story is ultimately all that positive on that front. So it does seem to be relatively positive when it comes to ESPN Plus and sports much smaller.
Okay.
But looking for continued growth both year over year and sequentially at ESPN Plus. And Hulu and bright spot as well. It's been a little bit flatter, I would say, hovering around this sort of 48 to 50 million. But if it comes in at 49.2, it would be about a 4% gain in subscribers.
What's SMCI doing? Super Micro, SMCI. Buyers. Ooh, buyers, Frano. SMCI.
Yeah, that's a really good point. I mean, Disney's also 84% this week, so having a really nice week.
Yep. Yep.
I think we're seeing a strength across the board today.
By the way, Corey, just note what happened after March.
They have not though had earnings, and they've not posted positive earnings since their first quarter of 2022. So they report next Wednesday before the market opens. But what's amazing is despite not having a profit for several quarters, they've had cash flow. So I did do some deep research on Warner Brothers Discovery today, Alex. I was way too in the weeds on some of the profit and losses. I mean, I can make the case either way, but just for sake of example purposes,
All right, SMCI, Super Micro is getting some buyers there, Frano.
Using the last 12 months of data, all three are generating very similar free cash flow. Warner Brothers Discovery, though, is worth around 1/6 of Netflix and almost 1/8 of Disney. So, I mean, keep in mind, Netflix does have around 2.5 times the number of subscribers, and Disney does have
Okay. NVIDIA at the high of the day. Wow, NVIDIA just blew it away. NVIDIA. NVIDIA, what a nice day on NVIDIA. Nike. Or Nike looking good. Groupon. Oh, Groupon's up 62 cents today. Groupon, thank you.
Where they are in this market, but they don't have the legacy businesses dragging them down. That's the big story here. Not profitable on a diluted adjusted EPS front. At least that's not the expectation. Look for a 6-cent loss for WBD. When it comes to HBO Max, or just Max now, this is always going to matter when it comes to HBO.
Intel having a good day. Intel's still going.
What is it right now? What is the show that they're selling us? I don't know. I don't even know if they have one. It was Game of Thrones for the longest time. It was all those other, from Entourage back in the day to others. I couldn't tell you what's going on at HBO Max right now.
That's a really good point. And I will say all of our managers are HBO enthusiasts, so he would perhaps know better when it's streaming. I am not up to date on what is cool in the streaming world right now because I'm going to subscribe, I think, to like Hulu and Disney Plus at this point. But that's a really good point because I do think there's a seasonality to it. It's a big show, it's a filler. But then when there's a lack of show, it's like, are you still subscribing to HBO?
Or it's like when that new kind of spin-off of Game of Thrones came out and you'd see the posts on social media in New York and it'd be like every TV was watching the intro at the same time. Yeah. How long did that last? 2 weeks? And then that show lost its momentum? So they got to figure something out. They got to come to something with the market that just captures the audience that they had in recent years. They don't have it right now.
Yeah, I think with the strikes that have been going on all summer, I mean, that's not helping their content pipeline either because I'm sure we'll have some production delays that's already been hinted at by several other companies. So our last name today, though, is Alphabet. But what I wanted to focus on specifically to keep it media focused here is YouTube because we did get some news yesterday. YouTube has announced a price hike for its streaming service in 7 countries. This is just
weeks after hiking the prices in the United States. So some of these countries include Argentina, Australia, Austria, Chile, Germany, Poland, and Turkey. But the rate change does affect their YouTube Premium and Music Premium's individual family and student plans. But the pricing is pretty substantial. I mean, the biggest shock would be actually in Australia. I was seeing the price increase for a premium family subscriber. It's going to go to around $17.99 in Australian dollars to around $30.
Okay, we're at the highs of the day. I keep thinking every time we tap against this area that, you know, we're overbought, that this is it. This is it. Gonna pull back. It looks like they are taking profits off, I would think. SPY. Puts for Monday, maybe.
I think it makes sense. I'm not sure that it deters those who avoid the ads, who want that ability to minimize those videos and have it play in the background. But, you know, for me, I'm okay with watching the ads and hitting that skip ad button 5 seconds after. Got to be vigilant, got to be ready, but I'm ready to do that. YouTube TV, now, look, if you're Charter Communications, if you're Cox Cable in, you know, kind of the Omaha region, that's one of the legacy ones that I know. If you're
Paramount,
any of these companies that's
Disney,
you know, access to cable linear TV,
K-Web,
got you in the crosshairs right now. And
Unity,
guys to the NFL through NFL Sunday Ticket, I don't see how they don't become a formidable you know, force in this space in short order.
Walgreens.
It's truly the best way to watch.
Huh, Walgreens on the move. Walgreens Boots Alliance, that was active earlier. Above average volume. Nike at the highs. Nike, I just keep thinking Nike's going to continue. Maybe 111. 111 is the 200-day moving average for Nike. Nike volume. Mostly green. There's a few reds in there. Nike. What is Upstart doing? Upstart, that started looking interesting. Upstart. Okay, it's above the 50-day. This could accelerate like it did last time when it ran higher in May. I think, Cayman, you were in this in May, right? Then it just kept running. Look at the volume by price bands. Gets above, wow, gets above what, 38? 38. Okay, we're starting to push back. 38, 37, 20, 37, 75, 37, 75. 37, 70. Let's try that. 37, 70. Nope. 30. I'm trying to push this line lower. 37, 50. There we go. That's good. 37, 40 should do it. Wow.
Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street.
37.
Monday through Friday, 3 p.m. Eastern. Available anytime, anywhere, on any device for free. Only on the Schwab.
Looks good. This one could get going pretty fast.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere.
37.
Schwab Network.
Every time it looks like they're going to sell this, it turns out it's just short covering. All right, check out the volume here. Check out the volume. Pump up the volume. Pump up the volume. Pump, pump.
Well, there has been some optimism associated with bid activity this week. I think, unfortunately, though, it's kind of right back up to a key area of resistance right now in a longer-term downtrend. Let me show you exactly what I'm talking about, how this move up that we're seeing kind of reminds me of, and I know they're not Disney characters, but Lucy setting up that ball for Charlie Brown again. As you can see, the rally off the lows from last week and throughout the week, again, from 78 all the way up to 85, 81. So a solid move to the upside here in shares of DIS. But let me show you what I'm talking about in terms of why I feel like this might be setting up for a longer term just weakness that's continued here. We're going back to now on this chart, we're looking at 4-hour candle charts here. So we've moved from the 5-minute to the 4-hour candle charts here and gone from the price activity we were looking at just this week to the price activity we've seen since May. And looking at this bigger, longer term chart, you can see
Okay.
Here's the move that we just looked at, right? The move over the last couple days. And you can see it's just a small.
All right, Upstart. That was one that Mondo mentioned.
Downside. When you have a market that's trending lower like this, you have areas of consolidation that form at lower and lower levels. And so you're constantly seeing value form at a lower level, which just sort of solidifies and kind of makes that working assumption, again, a valid one. And in this case, until we trade above 90, that continues to be the case. Here you can see we're kind of working our way right back to that upper extreme that we've seen multiple times. We're talking since the middle of August. This has been an area where DIS has really struggled over the past few weeks as well as $86, $87 level. So again, you would kind of expect the same until you take out that level. And then even then, you're really looking at the $90 level before you kind of invalidate, again, that working assumption that value is moving to the downside. Speaking of value moving lower, it's not just since the beginning of May, this chart that we're looking at from 100 down to that $78 level. Take a look. This chart, very similar pattern, right? But these are now daily candles. So we really widened up our time frame going all the way back to March of 2021. And I want to, again, the similar pattern to show you this consolidation that in a very kind of systematic, a very structurally well-defined way, just establish themselves at lower and lower levels. So again, we're currently balancing, as you can see in the bottom right corner here, around this $82 level. As long as we hold below that previous area balance around 90 in just a technical look at this stock here right now. Again, we're not even discussing the fundamentals, leaving them completely out of this discussion. We're discussing the technicals. We're seeing value move to the assumptions that that's going to continue, right? We always say the trend is your friend because, well, here you can see in this instance it has been.
So Ben, as far as some big picture takeaways here, what are you really looking at now into Disney's quarterly update, which is next Wednesday after closing up?
Well, you mentioned the net change in terms of what we're seeing here, so I kind of started with that. Where are we on the year, right? And just recently got that average, but you know, Jenny, I noticed this week you got the NASDAQ, you got the S&Ps, and you got the Dow taking out the 200-day moving average. But look at Disney lagging behind that. Here's that longer dated, that yellow line. I'm also noticing the enthusiasm we're seeing just this week kind of has us right back up to those highs in RSI, where the relative strength indicator kind of fizzled out in the past here. So again, I don't necessarily want to say history is going to repeat itself, but in this trend environment, that's kind of what you're leaning on. You're sort of leaning on these areas that the market's established on the way down, and until you start to take those out on the way up, the working assumption again is that the trend remains low.
Yeah, I think we need some more conviction to the upside. You can see, as you pointed out, we're trying to break out. We've just yet to be able to hold from these levels. I mean, we might move this week, but that has to continue on. Year-to-date losses. So now we're looking at trading this thing here, Alex. I mean, we've already next week we've established, but considering the weakness, we're also considering the fact that the shares are pretty strong right now. The weakness into a trade that's skewed more neutral.
Yeah, it's hard to have confidence in a name that has struggled so mightily as Disney has. And so I looked at a neutral bullish strategy. There has been signs that 78, 79, 80 level has been significant in recent months, and those who are going into earnings looking for a bullish or neutral bullish strategy are hoping that remains the case. And so we're targeting down near that level with a skewed put butterfly for our break even. Break even on this strategy, which I'll go through in a second, is in the 50. We're going to find one of the 85, selling two of the 83s, and then defining the risk by buying one of the 77. So
$2 wide debit spread, $6 wide credit spread.
All right, let's see, 35, 43.50. We're just above 43.50 support.
Really, the trader investor who would be doing this type of a strategy would be kind of hoping for a move, at least unchanged, possibly even higher, so they would just capture that credit. This all expires next week, so it's very short term, centered around that earnings event. But it does have an added kicker in the event that it does move lower. Best case scenario would actually be a slightly lower stock price around 83. But most importantly, it brings that break even down to 80.50, which they put $5.45 below the current share price. And that's the most
And of course, it's still risk defined if we see some disastrous result when they report earnings, which I'm obviously hoping that does not happen. But now, our next name today, Warner Brothers Discovery, basically closed out a nice 20% move higher this week. Also making a 6% move higher today, almost dwarfing Disney's strength, which is up 3%. Ben, what else are you seeing?
All right, some puts make sense now. This looks better. Puts.
In this instance, it looks like he's getting a foot on the ball, so to say, as we've seen again a nice move up here. You can see the rally on the right side of the chart here. We're talking about from this $9 level all the way back up into near 12. You can also see how we've taken out a bit of a double top that we established back.
Thanks, Russell.
If you remember, up around this $11 level, and just sort of in the same fashion here, let's just draw some of these areas of consolidation that formed at lower and lower levels on the way down. It's a 60-minute candle chart, and you can see.
Okay, ARC K is up. ARC K is up. Okay, gapping up. It's a long way from 50. 50, 51. Got 10 bucks to go. All right, so another 20% upside, potentially.
Balancing around 13. You're still in a downtrend. We're looking at daily candles here going all the way back to, as we did with Disney, back to the beginning of 2021. So it does look to me like tides are starting to turn a little bit here, more so on Warner Brothers than they are on Disney in terms of that most recent rally and significance associated with it. Its ability to take out here as it was established on the way down.
I love to hear that, Ben. So as far as big picture, what are you watching here? This name also has earnings next Wednesday, but before the market opens.
Well, even that, I mean, that feeds right into this kind of tides are starting to turn narrative, because remember we were talking about Disney, and the one thing that I was a little disappointed about was the fact that, well, we were holding below the 200-day moving average. So that's still the case in terms of Warner Brothers. But the other thing I pointed to at Disney is, remember the RSI was limited in terms of participation, unable to take out those October highs as of yet. Look at what's going on here. You can see a lot more enthusiasm in terms
S&P pulling back.
So let's keep an eye on this next week into the middle and end of November in terms of.
Let's go to the 5-minute on a sell. 5 minutes on a sell. Just remember the momentum is bullish, so I'm not expecting a big drop off. 15 minutes on a sell. 30-minute on a sell yet? Not yet. It will be if it drops below 43.56. So far, we got the shorter time frames below 5-minute, 15, 5, 2-minute, 1 minute are all on sell signals. Let's go to the 5-minute. Okay, 5-minute S&P.
But all right, we're looking at a bullish strategy going out to November 10th, so just next week as well. Find the 11, 12 and a half call vertical. So just a little bit more directional than what we looked at in Disney. Really trying to build on that trend movement that we're starting to see. 75-cent debit would make a $1.50 wide spread. Half the width of that is 75 cents. So risk 75 to make 75. 11.75 to break even, basically right in line with the current share price of just over 11.70. So
All right, let's see what's biotech doing. LABU. I just saw a note from HCPG. All right, nice move here. Okay, so you're in the beginning of stages of being able to sell. Okay, let me just check something out for Tony. LABU. Mm. 340. Mm.
My dad was a hard worker. He used to do side jobs, installing windows, charging something like $100 a window, and other guys were charging $400 to $500. Didn't want to do that. Proud of the price he was charging. My dad instilled in me always put people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me. Yeah.
Binge watch the markets with the Schwab Network. Tune in 24 hours a day, 7 days a week at SchwabNetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Schwab Network. Spotlight the biggest market trends on Trading 360. 11 a.m. Eastern, only on Schwab Network.
Kickstart your morning with a full list of items, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Features with Ben Wittgenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network. Welcome back to Next Gen Investing. It's time to look at a developing story with Kevin Greaves, the markets correspondent here for the network. So, Kevin, story's been developed. It seems like it's developing to the upside, too, because it's leading markets higher. That's the jobs report. It seems like what was bad news ended up being good news. I mean, walk us through these numbers.
Yeah, pretty much on all metrics here, we are seeing the equity market when you're looking at the S&P 500 up about 1%. Even the Russell's up over 2.6% right now. But we did have this data coming out earlier today. We actually did see an increase of about 150,000 jobs added for the month of October here. And that actually did come short of expectations, which were 180,000 jobs. Now, one thing to keep in mind, 150,000 jobs is still very significant when you're looking at the broader scheme of things here. The unemployment rate did also increase to 3.9%. This is the highest level since January of 2022, but once again, still historically low. The manufacturing jobs, I thought, was the very interesting number here. We actually saw that decline by 35,000 jobs. Now, this is mainly due to the auto strikes, so we should see that adjusted and revised in the next quarter.
All right, starting to move higher.
Down by 39,000 jobs. So the market does believe that this is just showing that the Fed is almost done, or potentially could be done with raising rates at this point in time. And now we're seeing this huge influx of buying activity going into the 10-year treasuries and the 30-year treasuries.
All right, we're just going higher. Going higher. Bastards. Okay, so every time it looks like we're going to sell, it just turns out to be profit taking at the highs. We are overbought, but I mean, just reflect on the fact we're trading 6-to-1 up volume. Tick cumulative has been rising all day long. 6-1 on the NYSE, 4-1 on the NASDAQ. And what is NYMO? NYMO has got to be at 100. Okay. Wow. NYMO's at 100. Oh, boy.
What's insane to me is we go back to Wednesday afternoon. Kevin Green chatted me on our internal kind of work chat and said 42.50 today. And I said in response to that, at least, so this is while Jerome Powell was talking, kind of just us bantering back and forth. We're at 43.80 now. We thought we were being, kind of funny, saying, hey, the market's going to rally like 40 points on Wednesday. We're 130 points short of where we were going to get, or at least what we thought. So really, really impressive rally in the market. I think Kevin's spot on, though. Fed sounds like it's done. This isn't going to change their mind. So you now start to have more and more reasons for the Fed to be done. The market's already sniffed this out. There's 100 basis points in cuts priced into the market right now for next year.
And I think that's something to be optimistic about, because I just think like the lack of surprise is something that's huge. I think the market doesn't like uncertainty, is something that we know for certain. But now to shift gears here and focus on DraftKings, the name that there's no uncertainty about this move today. We're seeing a 17% move to the upside on the back of really strong results, as not only analysts, but a lot of their management echoed really strong growth prospects for the foreseeable future and a strong third quarter. I mean, they reported monthly unique players increased to 2.3 million in the quarter. That was a 40% jump on a year-over-year basis. They did report a third quarter net loss of around 61 cents per share, better than the 69 cents per share loss expected. Revenue also did come in better than expected. Their average revenue per monthly unique player was around $114. That was a 14% increase. And what's wild to me is their revenue guidance now. They gave a new range of 3.67 to 3.72 billion. That would imply a 64 to 66% increase year over year. I know that DraftKings is still establishing itself and still growing, but it's amazing to me the growth metrics they're still able to put up and the positive impact of some of their products, their overall technology that they highlighted on their earnings call. Their CEO saying they have differentiated features and functionality that has created this exceptional user experience for their mobile sports betting and iGaming customers. So really, really strong report out of DraftKings. Shares are now up 192% on the year.
I think it's becoming increasingly clear that as this gets more competitive and more,
Okay, and his best is going to push this higher. This is great. This is good to see. I'm bullish. I mean, most of my positions are bullish. So looking for VIX to drop off. The bears are, I'm sure, are swearing at their computer screens.
DraftKings is way ahead of expectations in this report, almost 13% above the revenue expectation. 22% narrower than expected on the loss front. So yeah, they're still losing. They're in growth focus mode still, but they're growing faster and they're doing it more efficiently than the street's expecting. This is the proper response to see the stock surge higher by 16% today.
It makes me even more optimistic on this name, because we're still fairly underpenetrated in the overall market, given the fact that there's still legal issues at stake. I mean, many states, most of the states, I think at this point still be able to legalize gaming. I think it's always way less than I would think, because we live in a state where it's legal. So like in my bubble, this has been legal for quite some time, but there's still several states that we could see legalize sports gaming online over the next course of the year, and that's only a benefit to a name like DraftKings.
No doubt, and there's some populous ones too that are still needing to get this passed, and there's also areas like Nevada where DraftKings isn't an operator. So there's a lot of regulation in this space, and that's going to be what holds this company back, or what propels it to the next level. Is as those barriers to entries get knocked down, you can really see what happens when a company executes well and the loyalty that it gains. So. Gonna be cyclical, you'd hope.
What's Apple doing? Okay, Apple pulling back in a little bit. All right. Twilio at the high of the day. Twilio. Disney hanging out at the highs. Wells Fargo up 3%. Wells Fargo Bank's looking better.
But what's amazing to me is when you zoom out, not to be pessimistic here because it's a really nice day and a really nice result from DraftKings, but we're still down, I mean, pretty substantially, 53% from their all-time high, which was around $72 a share made back on March of 2021. So that's kind of amazing to me that this stock has rallied 190% this year, and we're still down off the all-time high.
It's important to note, though, this came public through SPAC merger, and we know when the SPAC mergers come public, 10 is sort of your baseline. I think it's gone, 300% higher from where it basically started as a publicly traded company if you use that $10 mark as we know from SPAC. So it's one of the success stories in the SPAC merger space that's been clouded by some disappointment. But yeah, you can't discount the fact this thing got up to almost 75 a share. It's half that now. But it also got down to $9.77 at its low point of last year. And it's made a really impressive recovery off that. Huge year so far, almost 200%. There's a lot to be excited about, I think, right after a DraftKings investor.
And I haven't heard the word.
What is Bitcoin doing? I haven't looked at that all day. 34,429. Okay, back below 35.
Today, FOMO feeling is clearly to the upside here, and the strong guidance, strong growth metrics going forward. Street likes this name. Street will see about 15% upside to take the average analyst price target. It's still, really nice price target to be at 24 buys, 9 holds, not a single bear in this name. So as far as trading DraftKings today, walk through what you're thinking.
Yeah, so it's bullish, but I would almost call it neutral at this point as DraftKings continues to surge. I look at a 35 fall calendar in December.
Intel.
All the way up to January, only $1 higher.
Intel looking really nice, right? There's some put credit spreads on Intel. Intel 37 probably holds. Intel. What's Intel's implied vol? Can't be that much. Just talking to myself, by the way. Ever talk to yourself? Intel. 32%. Next week, Intel. Puts.
Looking for sort of a slow grinding of a move and really just maintain today. That's the big question I think DraftKings investors will have is we've had these big up moves. They're not always held on to. Sometimes they're kind of flash in the pan.
Yeah, that was a few earnings back. We saw a really nice reaction when their CEO said they're not seeing any
38. 37 is a what? 37 is a 20 delta.
Coming up next, we will talk objectively one of the biggest stories of the day, if not the biggest. That is all things Apple. We were hoping we could see them turn into positive territory. I think we're a little bit off there. We're down about 1% or about $2 here. We'll discuss some of those numbers more with Jeff Pierce coming up next.
Young lady who was in her 30s, couple of kids, recently went through a divorce. She had a lot of questions. I watched my mother being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was hurt, whether they would help her before, the client won't care how much you know until they know how much you care.
Yeah, Intel's not worth it.
Across all asset classes on Morning Trade Live on the Schwab Network. Weekdays at 9 a.m. Politics, no choice from bell to bell and beyond. Available anytime, anywhere, on any device.
All right, what's IWM doing? IWM, you know, I'm looking at that probably December. Oh, we're pretty close. IWM. Iron Condor, IWM. What's going on? All right. What the hell's going on with Schwab?
Your portfolio with the swap network. Swap network. They'll go into town.
All right, let me just quit Schwab here for a second. It's doing some weird stuff. Log out.
Learnings were the talk of the town yesterday afternoon as the stock initially moved lower, continued that move lower. Jenny happens to have up
All right, let me log back in. I got Schwab doing some weird stuff. What's going on? Hope everyone's having a good day. It is 1:48 on the East Coast. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Friday the 3rd. And it's 1:49. All right, kind of slow. What do I want to have for lunch? Not really hungry. Thanks, Corey. Okay. Oh, it's been a nice day. Good week. The way we're ending the week. Nice. I'd like to see Bitcoin a little bit higher, but other than that, it's not a bad day. Not a bad week. Exclamation point. Can you imagine at his age, after going, being at the top, the pinnacle, Sam Bankman-Fried? Yikes! That's just nauseating to think about. You know, man. Schwab is so slow right now. Spot's still hanging in there. Had to reboot my machine, just acting really weird. Very strange. All right, we're building S&P. All right, nice rally so far. Bears getting crushed. Apple turning again. Apple higher low off of VWAP. Stochastic RSI turning. Tesla just fading. Let's see, what's NVIDIA look like? NVIDIA continues. NVIDIA above 450. Nice. Tick cumulative, very green, very green. Let's go LETSGO. All right, Schwab back up again. I had to reboot my machine. It was just like almost taking 10 seconds to do anything, and just brand new machines. Okay, let's get back. Stop that. Okay. Okay, you're looking at AI. AI is in play. Okay, change in direction. Okay. What's the relative volume? AI. What's the relative volume? AI. Okay. It's currently trading 126% of his daily range. $11.17, huh? $11.17 you're looking at? Calls $11.17. 11.17. And you're looking at the 30 strike. Oh, yeah, there's a bunch of trades there, huh? Bunch of trades there. Okay, thank you, Steven. Looks good. Oh, boy. Okay, we're just consolidating up here at the highs. So we're not making any new highs. We're not making new lows. We're just bouncing around inside of that price action. So I would just be methodically chipping away, taking some profits off the table. That way we can reassess and regroup on Monday. Fewer open positions. Molson Coors bouncing off the lows. What's Apple doing? Apple's still on BWAP. NVIDIA at the high of the day. NVIDIA made 450. All right, I'm just sitting here scanning through everything. All right, we're still chopping around. We're just overbought. So all right. Not much to say. Markets are just hanging out at the highs. I'd be harvesting profits, reassessing the markets, considering where we might be headed, and collecting some cash. We had a huge run up last couple of days. I mean, even Disney bounced. Even Disney bounced. Brian Lund is so funny. I love his sense of humor. I love his sense of humor. It's so funny. Oh, man. Can you get Adderall in prison? Asking for a friend. I tell you, I just can't get out of this out of my head about Sam Bankman-Fried. I mean, it's water on the bridge now, but damn. Risk management. Just shaking my head over here. All right. Is everyone having a good day? It's kind of quiet, right? I think a lot of people went to play. They might have taken my advice and just gone and played golf or got outside. It's beautiful outside. Is it 2 o'clock yet? 2:13. 2:13. Disney back to the top of its range. That'd be a hoot if Disney broke out. All right, here is Upstart. We were talking about Upstart before. Upstart. Okay. Upstart. Let me go take a look at Upstart. UPST. Upstart. Okay. All right, so let's look at IWM. What's IWM doing? Flat 174. Stuck at the top of the range. Not really any new trades to go by at the moment. Let's see what volume we're talking about. Anything? Signet Jewelers. That's interesting. That just popped up on high relative volume. Signet is trading. What is that? 1.5. Maybe the beginnings. Shockwave SWAV is trading 2.5. Shockwave 2.5 times relative volume. Shockwave looks pretty good. Shockwave coming out of a base is trading 2.5 R-vol. Let me just double check. Intel's still going. Shockwave. 54% IV. Trading 2.5 R-vol. That's right. That is correct. Correctamundo. All right, let's go take a look at those FANG stocks. I'm just going to talk this through. Microsoft pushing higher today. Microsoft pushing higher. All systems go on Microsoft, huh? It looks like it's just going to keep going. Microsoft's still going. It's clear. It's clear of a lot of obstacles, Microsoft. And implied vol is what? 22%. Microsoft's 22%. If you're selling premium, you want that to be above 50 implied vol, 50, 60, so you can capture some of that premium. Microsoft looks good, though. Microsoft looks like it wants to keep going. Where can Microsoft go by? Let me just check Money Magic's levels because I think we talked about this yesterday. Microsoft 352.50, and it is at 354. So we got to see these calls roll up. Calls. Microsoft. Microsoft going. Microsoft. Microsoft looks good. It's above all the money magic levels. Maybe see and make sure he didn't update this. Microsoft's clearing levels. Okay, Microsoft. Okay, that looks good. Microsoft looks good. I'll take a look at that in a second. I just saw you posted something there. Money Magic, thank you. Okay, 360 and 350. All right, we're above 350. 360 is the next level. All right, so it's the end of the day. Microsoft is trading 94% of its daily range and 80% of its ATR. It's a Friday, so you could look at Microsoft on Monday, but this looks really, really strong. Look at the volume. Wow. Look at the volume. Daily looks good, right? Daily looks damn good. Daily looks damn good. Yeah, it does. Momentum is obviously a bit overbought. Microsoft. What time is it? It is 2:25 on the East Coast. I hope everyone's having a good day. Very slow evening. It's a Friday. Fridays generally days where, you take your time and think about trades for next week. Oh boy. Nvidia's still going. Oh shit. Nvidia's still going. Okay, upstart. UPST, upstart. Nice turn there, upstart. Since about 12:30. Oh, look at S&P. Look at this. Look at this crazy market. Oh, man. Man. I took some puts, by the way. I took some puts for Monday. They're not going to work. The majority of my positions are longs anyway, so I really don't care. I didn't say much about it, but I kept thinking that, the momentum is clearly bullish. So why did you take the puts? Just in case. Just in case there's any dip, which I'm not expecting on Monday at all. And we're just talking 432, so not that far out of the money. But majority of my positions, like Microsoft and IWM worked today. Apple, I have some Apple calls for next week. Looking for those to maybe do something. Amazon, which we bought yesterday, if you recall. Amazon. We were talking Amazon when it dipped. Let me go to the 15-minute chart. Yesterday, Amazon. Yesterday. Oh my. Yeah, yesterday. All right, so yesterday we hit a pivot right here. Okay. Okay, yesterday we hit this A pivot. We hit the A pivot at the top. We hit B. If you don't know what I'm talking about, if you're a new member, I'm looking for this pattern right here. Okay. So yesterday, early, we hit at the open, we hit A. We pulled back to B. We already had a position in Amazon. Buying again on the low, B, C pivots. We started moving higher, and then we hit D, which becomes A for today. We hit D at the open. So you could have taken some profits off if you took it yesterday, or you could have added on an ABCD pattern today. Right now we're going. Amazon's at the high. Just need to get a little bit more out of this one. I mean, you could take profits. You could take profits from yesterday's trade. Those are up about 50 cents, 75 cents, depending on when you got in. Oh, you know, I took the 142.50s. I had the 140s before, by the way. I sold those, and then on that dip, I bought the 142.50. Okay. Just check. Today is Friday the 3rd, so that would be 11/3. Make sure you check your options. If you have something that's going to close in the money and you don't want to get assigned, you may want to jettison. So just check through your positions. I'm going to do that right now. So okay, 11, 11/3, 11/3, 11/3. What do I have that's 11/3? I got an alert from Schwab that I have something in the money. I don't have anything. 11/10. I don't have anything. Merck is up 103.65. TRBCX getting back to 140. I'll start looking to add the TRBCX. If you're familiar with TRBCX, we took a position last year, November, December, TRBCX, and last week we got stopped out on the part that we added recently. Okay, so this little down bar right here stopped me out because it was below these lows. Risk management. This one simple thing would have helped Sam Bankman-Fried, even if it did continue to move higher the next day or the next week, right? So you take 5% off, I'm out. I don't want to lose 5%. We ran up 45%, took half off right before the debt negotiation, added it back about 10, 12 weeks ago in here. And I told you that if we drop below 134, I'd be out the position I just added, the most recent. So first in, first out. But in this case, in my mind, I'm taking off the last add. So now we're reversing. So I'll be looking to put that back on if it takes out the high. If it gets above 145, that's a 45% gain from the end of 2022. 45%. It was trading at 100, runs up to 145. Easy calculation, 45%. So I'm looking for this price action to come out of a consolidation and move higher. That's easy. Easy enough, right? So there you go. Amazon still pushing. Amazon. I don't have anything in the money. What was near the money? Maybe they mean near the money. And I don't have anything expiring today. Wait a minute. I have Google. No, that's 11/17. What the hell are they talking about? So Schwab will send you these automatic alerts. I think most brokers must do the same. If you have a position that's near the money or in the money and it's expiration day, usually you'll get an alert. I got one from Schwab and I don't see what they're talking about. I don't want to get assigned anything that I'm not prepared to be assigned if that wasn't the plan. So I'm just going through my 1103, November 3rd expiration. I don't see anything. What is he talking about? I'm just chattering away. Don't mind me. IWM. No. All right, that's a trailer, IWM. We took some off. Thank you, Stephen, by the way, for IWM. That was an observation yesterday, Stephen, and a number of people were long IWM. I think Scott Zell, I think you were long IWM, right? And maybe Cayman. I think you might have taken a long on IWM. The thing I liked about the long on IWM is that everything else was running. Nice job, Cayman. Yeah, I took those too, Cayman. I saw your post and I said, that looks pretty good. So I took your trade. That's your trade. I don't post other people's trades. It just makes things confusing. Everybody has big boy pants on. They can make their decisions. A lot of times I'll tell you when something's moving, but if it's somebody else's trade, I generally don't repost it or make a comment. I just take it. Okay. To keep things less confusing. Okay, that looks good. Yeah, I don't see what Schwab is talking about. Let me just double check one more time. Make sure I'm not missing anything. It would be nope. Most everything I have is either December or January. I did take a Darden's restaurant, a credit spread, but that's just still going here. Those expire next week, I believe. DHI. DRI. All right, we're gonna rally. Holy smokes! Look at this market. All right, DRI. Yeah, I took a credit spread on DRI. I bulk put credit spread. I was looking for markets to move higher. It's up 46%. We're coming into 245. 245. Okay. PayPal. Do I want to do anything with PayPal? It's not up that much. PayPal. It's up 50 bucks per contract. Got January. I took PayPal January, 55 calls yesterday when another one that Buford mentioned, PayPal. PayPal's doing well. Clearing some levels. It's in the money. Oh, that's what they're, well, doesn't matter. It's in the money. I don't care. I'm not going to get it signed. I say that. I've been assigned before with plenty of time before expiration. Like in this case, I got January calls. I've been assigned before where somebody wanted to offload a bunch of stock. I closed the position, but it does happen. Not very often, but it does. January 2024, 55 calls. All right, S&P is making new highs, folks. Jeez, I tell you what, this is a hell of a day, hell of a week. Haven't had one of these in a while. Nice move there. 43.75. Remember 43.75? We're back to 43.75. Nice. Almost there. I have a headache. Lowe's. I see people in Lowe's puts. Huh, interesting. Lowe's puts. Did it pull back? It was looking pretty good. They're talking Nike puts? No. Okay. Maybe I'll take Nike off. Nike. Okay, a nice gain on Nike. I'm going to go ahead and take it off. Okay, I'm out of Nike. Nike. Boeing. They're looking at Boeing puts. I guess because things are getting a little stretched. Extended. ARM Holdings. Wow, what a nice pattern on ARM Holdings. We've got ABCD pattern on ARM. ARM Holdings. Here's an ABCD pattern. End of day, A, B, C. Looking for D. ARM is getting back to close to the IPO highs. ARM Holdings. Talked about this one a little while ago. ARM. Looking good. ARM. Okay, Walmart. Walmart's at the highs. It's probably going to pull back in towards the 921 day. S&P still following through. UPS. Okay, that's pushed. XOM, ExxonMobil. Okay, probably resistance for now, Exxon. Okay. ARM Holdings. Wow, this is a beauty. Very happy with ARM. Shit, there goes the markets. What's TJ Maxx doing? TJ, 2-day swing. Took it off this morning. Whoops. What's going on here? What's it about, Alfie? Okay, TJ Maxx. TJX. Okay, at the high. So I took it off earlier, I guess around 11:20 or so. Nice profit. Kava. Chameleon. 50. What's the January calls going for? January. Kava. We're at 36. 40s. Okay, Kava. Interesting. I saw my first Kava restaurant when we were in Raleigh, Durham. Looks pretty nice. Looks pretty nice. Kava. Let me see here. This looks really good. I want to show you something here that you're going to find interesting. All right, where are you? $2.52. How's everybody doing? Okay. All right, that looks good. Oh, yeah, it's been a good week. Nice way to celebrate, go out with the family, do whatever, enjoy yourself. It's all about family. You sit in front of the screen all day, grow old. You don't want to be one of those people. Those people. All right, there goes Kava. Kava on the move. Kava, Kava, Kava. Chameleon. Okay, Kava. Since it's IPO, Kava. Speaking of IPOs, let's take a look at some of the IPOs. Here's Kava turning off the low. This looks pretty good. That's a Bill Burr. Bill Burr. If you're into comedy and you're looking for something, you're switching through channels and you want to watch something, I personally think he's one of the funniest. Bill Burr, Burr, like Raymond Burr. Funny, funny, funny Irishman from Boston. He is just, what Do yourself a favor. Watch if you watch Netflix. Watch his first foray into comedy. Some of the older specials, and then work your way to the current, the one in Red Rock. Guy is so funny. Get yourself laughing. That releases some of those endorphins. You know. Jerry, show me the money. All right, so Kava. Yeah, this looks good. Kava looks like it could actually, Jerry, get something going here. 30, what was that, 31? 31, 31. Let's see, 31. Yeah, 31. I don't know. This looks pretty good to me. Dun, 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 dun. Just need the volume to start picking up. All right, watching that volume. Okay. Yeah, baby. Yeah, baby. No fugazi here. All right. Yeah, looks good. Two, 3 o'clock. 3 bells, all is well. 3 o'clock. 3 p.m. East Coast time. Darden. Now check out DRI. Darden Restaurants. Look at the move on Darden. What's McDonald's doing? Remember McDonald's earlier in the week looked pretty good. Following through. McDonald's following through. Nice when a plan falls into place, right? We got less than 60 minutes to go, 58 minutes to go. I'm your host, Cousin Bidding, coming to you from theclosingprint.com. It is Friday the 3rd. What's Apple bounced a bit? All right, Apple. All right, I got to take this headset off. I got a headache. I'm going to pop open a beer. I'll be right back. Haven't had a beer in a week. At least you know I'm not an alcoholic. Throwing out symbols. Tick cumulative, very bullish. Up volume, while it did dissipate from 13.5, while tick cumulative did dissipate from 13.5 earlier, it's holding steady at 6.5 all day long. Tick cumulative is rising. Why is that important to you, to me, and to anybody who's buying on the long side? It's because institutions are buying. Yesterday we had a 9-to-1 up volume MAD, major accumulation day, a mad day for stocks. Whenever you see a 90% up day, that generally happens when institutions are buying. When are they buying? They're buying in the seasonally strongest months of the year. You got so many things going in your favor. While we are a bit overbought, every time I say that, the market just keeps going higher. So what's that telling me? It's telling me the institutions are buying. It's nothing like last couple of weeks where we were dropping off precipitously. Look at the New York FANG index. Above the 50-day. Looking pretty charming. Look at this move. People, this is very bullish. You should be pretty excited without being giddy and getting slaughtered. This does look pretty bullish. All right, we're right at that trend line now. Not that that matters. RSI, wow. All right, the 10-year peaked just like it did back in October last year. There goes Apple into the close. Apple going. Everything but Tesla. Tesla's up $1.22. I'm away from the mic, so you're not your volume's not off. All right. I will say this every time we start pushing higher, I just can't believe we're overbought, getting more overbought. And while that's my opinion, I got to watch price. Because price is king. We're up against resistance. Let's look at the 10-year yield. Sitting on the 50-day. Does it bounce next week? That would be unfortunate because we have such a good momentum. We have such good momentum that if we do bounce and start to move higher, that could take the fire out of the bulls. All right, so that's the one caveat. NVIDIA is still going. Oh, boy. Nice trade there, Cayman. Dick's Sporting Goods trading 1.5 RVOL. Dick's. DraftKings, DKNG, DraftKings. That was one that Steven mentioned. DraftKings, beauty. Yeah, Stephen, watching you over the years, it's really a pleasure to see people develop a skill set and just constantly pounding on these trades, making money. So many good traders in the room. All right. We got a little bit more than 37 minutes to go, sports fans. I'm your host, Cousin Vinny, coming to you from theclosingprint.com, giving you the play-by-play. It's Friday the 3rd. And we've had a good week. I would close some positions. Just me. I'm talking about me. I would close some positions. I'm telling myself, close some positions. Review everything that's on your screen. If you have anything that's expiring, you don't plan on being assigned. If you're trading options and you have in the money options, you don't plan on being assigned. Check it out. Make sure you know that 11/03, November the 3rd is today's expiration. Maybe exit those positions, especially if you're in the money and you have a profit. Or if you want to be assigned, that's fine too. Just make sure you're reassessing towards the end of the day. We got a little more than 35 minutes to go. Amazon pulled back a bit, by the way. All right, so we did pull back a bit as I've been typing here, just making some notes. End of day. I don't do anything in the last 30 minutes anyway, but Kava certainly looking good. Kava chameleon. I got a feeling restaurants are going to do well into the holiday. Costco's under 100. Costco. Huh? I don't get it.
This stream is sponsored by Tick. Get free daily put points, Fibonacci, and market profile levels by signing up at tick.com.
Look, you've had a good week, folks. Yeah, friend. I can't leave Costco without spending $200 easy. And then if I don't pay my credit card off, my Costco credit card off immediately, I'm paying extra. So I always pay the credit card off too. But it's hard to walk out of that place without spending $200-300. Now the food lasts, for a good couple of weeks. And I like kind of do this kind of roll where things that I bought last week, I'll buy it new the next week. But $200-300 worth of food and stuff from Costco can last quite a bit for a family anyway. The only way you can beat this inflation is to have a membership in Costco or BJ's, or, if God forbid you go shop for food at Walmart. All right, so we saw a little bit of profit taking there. Now they're starting to buy it up again.
Says I may support holding rates for about 8 to 10 months. So again, that's Fitzbostic saying I may support holding rates for about 8 to 10 months. The first time we've got a time frame on that rate holding duration beneficial. Bostic saying I may support holding rates for 8 to 10 months. Bostic says I don't have a US recession in my forecast. Bostic says I expect growth to moderate to a methodical pace.
All right, we've got 20 minutes to go, 21 minutes to go. Upstart, nice move on Upstart.
Looking again now to the early market time close imbalance, now sitting at 6 million to the buy side. As Bostic says, if inflation expectations creep up, we've got to act.
Oh man, what kind of week is this, right? Nvidia finally seen a little profit taking.
Inflation continues to wane. It confirms that Fed policy is in the right place.
Tesla. Apple. Okay, Apple, can you run up a little bit more?
Says businesses have said wage increases similar to 2018 to 2019. Wage inflation is developing in a good direction, as Bostic says. As Bostic again welcoming more moderate wage gains. As Bostic says, I expect to see inflation falling into next year. Also clarifies that I think we're in restricted territory today. Bostic says a policy shift would be warranted before inflation is at 2%. So that's Fed Bostic saying the policy shift would be warranted before inflation is at 2%. Again, Fed Bostic there saying as 2% inflation gets closer, the Fed will have to waive interest rate levels. Again, Fed Bostic has now finished speaking after the interview with Fed Bostic on Bloomberg TV. It is now over. So looking again now to the early market on close imbalance, still at 6 million to the buy side. So just to recap some of those comments from Fed Bostic in that Bloomberg TV interview, as he did reveal some transparency about his comments. So he did say I may support holding rates for about 8 to 10 months, but did add that it is likely the Fed policy is in the right place given the economic outlook. And did also confirm, or at least to share his opinion, that a policy shift would be warranted before inflation is at 2%. So again, just hearing some comments from Fed Bostic on this Bloomberg TV interview, and he is now finished speaking.
Google, nice climb for sure. S&P is super strong. Still trading 5-to-1 up volume on the NYSE, 4-to-1 on the NASDAQ. Tick cumulative is still very green, even though we are pulling back a little bit, folks. Looks pretty strong. The only way tick cumulative is going to rise like this is if institutions are buying. So fading a little bit, we'll make a few bucks on the downside on this fade. Apple holding up pretty good. Apple holding up pretty good. Watch Apple run into the end of the day. That'd be kind of cool. Apple. All right. We continue to fade. Apple breaking out. Apple going end of day. There goes Apple into the gap. Apple into the gap.
They purchased around 83,000 shares.
All right, we'll get 7 minutes to go. 7 minutes to go. Apple is breaking higher.
On Thursday. Now, we are seeing shares surge on the session, so this name has also had a really nice week. Not quite the same strength that we had seen out of DraftKings, but pacing close up around 8.5% just this week alone, and trading around $78. So that is looking a little bit more profitable here. Now, they are really betting on the fact that Moderna, despite the fact they have seen continued weakness from the vaccine fallout, is forecasting for this growth resurgence here in 2025. So definitely more of a wait and see story. But what's interesting is I had to look at the bigger picture here. You call this the queen or king of growth engines in terms of ETFs, but since January of 2019, the main exchange traded fund, Arc Innovation, has fallen around the top. I had to do you have to consider this though.
Friday, that's so harsh.
This is crazy. Okay, it's down 5%. You compare that to some of the major indices, ETFs. You got, the Dow ETF is up 52% over the same period. You got the S&P 500 ETF up 76%, and the Qs are up 128%. And even worse than that is if you add in the 16% loss in purchasing power from inflation over that same period, it actually puts it down more like 21%.
Jeez. All right, don't tweet out this segment because the art lovers are going to come after you.
The numbers don't lie. Price is king, Oliver.
And we're still mired, in the $30 to $50 range for the fund. So,
Apple.
Disappointment, especially when the market had this massive rally back the past year to within, like you pointed out, like 5% of the all-time high if you're within a basic index fund. So, yeah, they still have a lot of proving to do that their stock picks are going to win out over time. Because that's the other thing, too. They're supposed to be, like, long-term picks, And, we're talking about this.
Who is this guy?
It feels like they got a lot of proving to do, too, about what else.
What the hell is he talking about? All right. I'd rather listen to Wapner. Oh.
Oh, there's so many different factors going on, Brian, with Disney. You have to remember, of course, they're also facing this activist scrutiny from Nelson's Health. So I think for Bob Iger right now, there's a lot of pressure to show cost controls are in place. He's already done a lot of layoffs, already done a lot of cost controls. So I think if
Google just right below 130.
part of this big activist push, want to have him show that he's succeeding with this digital transition while also keeping costs down.
S&P still drifting lower. S&P dropping off here.
One of their best weeks
with 4 minutes to go. 4 minutes to go. I'm your host, Cousin Benny, coming to you from the closingprint.com. It is Friday the 3rd of November. Looking for the first full week of November. We've got about 3 minutes to go, a little bit more than 3 minutes to go. Weekend video will be out Sunday around 2, usually around 2 p.m. or earlier. So be sure to look for that. We'll analyze the markets and update you on what our thoughts are for next week. As we proceed into the close, we're seeing a little bit of selling. We were at 13.5 to 1 up volume on the NYSE. It's 4.5 to 1 right now. That's still very positive. 4 to 1 on the NASDAQ. Yesterday, we had a 9 to 1 accumulation day. Tick cumulative is still rising, so that's bullish into the close. Tick cumulative rising means that institutions are buying. They're buying more than they're selling. And looking pretty good for next week.
Chip performers this week, although we still have to wait until November 21st for its earnings day. And then I'm going to end with silicon carbide producer On Semi. It's the only SMH constituent right now that's down on the week. It's up today about 2.5%, but look at that, down 18%. It's the worst week since 2020 because the company posted
Apple into the gap.
Yeah, and by the way, a good lesson with On Semi that not all semiconductor companies do the same thing, right? I mean, we always just lump them in the chip makers, but there's chip makers that do this and chip makers that do that, and some are doing great, and some are having problems.
to the point. So the analog chip makers
All right, so 2 minutes to go. 2 minutes to go.
not doing as well. We're seeing maybe the AI euphoria starting to come down a little bit. So yes, to your point, you can definitely not lump them all together, although it's very easy to do so.
All right. Christina, thank you very much. We'll see you later. All right, let's go back and a final word here on Closing Bell, the Market Zone. Keith Warner, listen, it's Friday. It's been a good week. So leave us with some optimism. Is this, I know you said a little bit of consolidation. Is this maybe the start of like the Santa Claus rally?
All right, we're just continuing to drop off here into the close. Nice trading day, nice trading week. Have a great weekend, everyone. Enjoy. Make sure you're spending some time with family. That's what it really matters most. Sit in front of the screen and making money. Not so much. It is important, but not so much if you don't enjoy it in the end. Have a good one. Take care. I'm signing off for this Friday, the 3rd of November. Have a good one. Just waiting for the ding, ding, ding. There goes Apple. Apple going. Volume at the end of the day. Apple volume. Volume in the day, Apple. That's a wrap. Take care. We'll see you on Sunday. Ciao.